Morning.
Welcome.
Welcome to Black Monday.
Black Monday. Yeah, this is one of the one of the most insane market events that I've ever witnessed. I think this is this reminds me of COVID, right? Definitely reminds me of what we had during COVID.
Yeah, reminds me of COVID, reminds me of 2008, 1987 comes to your mind probably, also because it's a Monday, but I wasn't around back then, at least not trading-wise. But yeah, it's dramatic, and it's in everything is falling market this morning for cryptocurrencies. We already saw that, of course, yesterday when Bitcoin, not to mention Ethereum and co, were falling without really holding on to anything, just going down, getting bashed. So basically, we are seeing the same, of course, now. That was an anticipation of what was going to happen with stocks. This morning, we saw very bad markets in Asia. We are seeing right now, judging by the CFD prices of brokers for US stocks, also the Dow Jones, the S&P 500 opening with a gap to the downside. It's a little bit trying to close it now. So all in all, yeah, we are sitting here, if I measure top to bottom on the S&P 500, at minus 22%. So we are now officially in the territory of what you can call a major crash. Not as bad as the one we saw during COVID, which was almost minus 36%. Not the as bad as the more delayed decline in stock prices we saw after the peak inflation period. So 2022, I'm talking about here, minus 28%. But we are getting close. And of course, for us, more short-term oriented traders, especially for the type of day trading we very often try to do here, it's also a challenging environment, because in this type of environment, because there's a lot of happening behind the curtains, which we can talk about later on as well, like mechanisms that usually work very well with the markets, especially something like price action, can be not working as you would expect it at the moment. Why? Because I think I wrote it to you, Jonatan, before I went online. I got on the phone this morning, talked to a couple of my old colleagues, especially the ones that are still sitting at trading desks at investment banks, and they are in full panic mode there, because a lot of the really, really big clients, and when I say big clients, I'm talking about hundreds of millions, sometimes billions of dollars or euros under management, they are in panic mode, especially the ones that are more on the hedge fund side, because usually they don't use only their own capital. They leverage, like we like to do as retail traders, but of course on a different scale. So they would go to bank UBS, for example, say, hey, we have like 50 million in our own capital. Can you give us a loan so we can leverage? Sure, you have another 250 billion here or whatever. And eventually, of course, if the prices go against them, the bank will approach them and tell them, hey, you need to top up your collateral. We need more money from you. And if they cannot deliver that, well, then the only option left is to sell the assets, for example, stocks. And funny enough, of course, this is always at a time where everybody has to do that. So it makes things even worse. It kind of puts oil into the fire. This is why we see those crazy volatile moves where you think like, what is going on? Everything is just going to the downside. Even gold is under pressure, whereas normally you would expect, like in an environment like this, that it should go up, that it should trade at, I don't know, $3,400 or $3,500 by now. And yeah, everybody is trying to get out of the door at the same time, or has to get out of the door. And the thing is, you never know, is this going to be over today, tomorrow, in 3 days, in 3 weeks, in a month? It will be over sooner or later. I already told Jonatan before that stream. We kind of had this coming when I look back at our past streams, especially for
before we go into that, because we have something very interesting we want to talk about. We want to talk about what we talked about last year, the end of last year and the beginning of this year, and when we talked about the yield curve and that sort of things. But before we do that, let's run your quick intro, and then we can go into the details of that. All right, the Monday market movers, more like the Monday market crashers.
The Monday market crashers, brought to you by Dirk.
We actually did a live stream.
Yep.
End of last year, and no, actually beginning of the year. Okay, so listen to this now, guys, because you think that this just came out of the blue, but both me and Dirk, we have talked about this scenario for quite a long time, ever since we saw the yield curve inversion. And that's something that we talked about in the end of last year. And we had a live stream at the beginning of the year. We talked about 2025 recession fear. And during that live stream, I talked about a theory that I developed at the end of last year, something that I've developed also through the talks with Dirk about this. And what we talked about was that we would have, and I can actually share with you the timeline that we shared during that live stream as well. It's quite interesting. I remember sharing the timeline, and we talked about how Trump's tariffs might be not what's causing a recession, but it's putting fuel to the fire. So if we quickly look at this, we talked about a timeline of this theory. Now, this was maybe Dirk was not completely in line with this, but definitely somewhere along these lines is what we talked about. Now, this is a post that I posted in December last year, where we talked about early to mid 2025. This is when we saw the speculative rallies in risk assets like equities and crypto, and then fueled by the late cycle dynamics. Now, let me talk about late cycle dynamics in a little bit. And then mid 2025 to June, we would have the key economic data like the GDP, non-farm payroll, ISM manufacturing, confirming a recession. I think that is highly likely that we might see in the mid around summer or late summer, we would see perhaps the economic data confirming a possible recession. If that happens, then I would think that at the end of this year, beginning of next year, that is when I will start to deploy capital like heavily into the market, because I think that is the end of the contraction. Now, focus on this. Fueled by late cycle dynamics. What do I mean by late cycle dynamics? What I mean is the credit cycle. Look at the credit cycle right here. Okay, this is the housing Bible credit cycle. This is the post-financial crisis credit cycle, and this is the current credit cycle that we are in right now. And we're going to call it Trump credit cycle. Okay, because it's Trump. Okay, now what we're going to do here is we're going to add these cycles within these cycles. And this was what we added to the chart in the live stream at the beginning of the year. When did contraction start? Contraction started on the 30th of December 2024. And the very, very top came 2 months later. We're currently in the middle of the contraction phase. And I believe that this contraction phase will carry on into the summer. And we will have stabilization end of this year. Beginning of next year, and we might very well come down and test this area for stabilization and recovery. Now, that is my overall theory, and this is based on a lot of different economic factors that I talked about in that live stream. You can go back and you can search The5ers 2025 market recession to look at the details of that. But just to make sure that you understand that both me and Dirk, we've exited Bitcoin around this time. We sold Bitcoin at around 100K, I believe. You did as well, Dirk. And we've talked for a very long time about averaging out of the market. So if you've been following this live stream for the last months, you would know that we're getting ready for a scenario like this. Now, obviously, we would not have expected the Trump tariffs to come in with this force, with this effect in the market. But as we said, Trump might be the catalyst to push things lower. And I think that Trump is looking for a great reset in the global trade. And that's what we're seeing right now. And I think this is the fueling, this is that capitulation part of the cycle. But I don't think it's bottom. I think that once recession is potentially confirmed in a couple of months, we will see a possibly a more prolonged bear market, like we had perhaps here, or we can have a V-shaped recovery as well. But I think we're going to
beautifully said. Absolutely true. I must say, to be fair, I sold most of my Bitcoin at 93,000, but I held on to some, and I also held on to stocks. Still am holding on to some US stocks also, because my plan was like every month after December to get rid of 10 to 15% of my value. So I managed to get rid of 45% by now, still sitting. 45% of the rest is that is, of course, because my expectation was that this scenario here we wouldn't see until late Q3 or early Q4 2025. So we are a bit early when it comes to this, although it matches nicely up with the credit cycles you just showed us, of course. And of course, there will be rallies also to the upside again. I'm very sure also today that Donald Trump is probably going to say something, to kind of comfort the markets. If that really is something that is comforting the markets, well, that's to be shown. The whole problem with this now, and if we look, for example, at Bitcoin, and I like Bitcoin to use this for illustration, you could apply the same for the stock market but Bitcoin has this beautiful 4-year cycle always. And we've been waiting and waiting and waiting on this logarithmic regression to break out here over the green channel to finally enter this blow off top somewhere at the top of the red channel. But I wouldn't bet on this now anymore, because obviously of what we are seeing right now would take a lot of catching up again, and we are running out of time. The natural cycle of Bitcoin, the bull market cycle, should come to an end somewhere between late April and late October of 2025. So there's not so much time anymore if we want to reach something like 200,000. And yeah, Trump with his tariffs has made things very to the worse. As a matter of fact, last Monday, was Monday, I think so, Wednesday, I think, I did a workshop with AlphaBeta Labs where I kind of talked about my macro outlook for the next years. And I actually said the problem about the tariffs is it puts the US that are already in a stagflation. Stagflation is defined by a lower GDP growth at the moment of, I think, 2.1% we saw last, and a higher inflation, 2.4%. That is, the money devaluation is faster than the GDP growth. This is the stagflation. The last real phase of stagflation we saw in the USA was during the 1970s and early 1980s, where we also had this double dip to the upside in inflation. It rose up in the early 70s, came down again, and then it rose even higher. So we actually could see, in my opinion, something like this again this time in the USA. And this would really lead to a very bad situation. Stagflation is notoriously difficult to come out of, because as a central bank, you only really have one tool, which is like manipulating the interest rates. You're not going to lower the interest rates to stimulate the economy if inflation is high. That would be adding oil to the fire in that case again. So you need some government-driven kind of subsidies to get the economies onto the legs again, which of course tariffs cannot be, because they are by the end paid by the US consumer. Now, Donald Trump is of course hoping that eventually you'll see all those goods that are currently produced outside of the USA being that the production is taken over by US companies for a similar or maybe even a lower price. And while that in theory can be true, and by the way, it's not going to happen tomorrow or this year, we're talking about at least 2 to 4 years until that really can happen. And you cannot build a factory from within like 5 to 6 months and produce aluminium or steel or even consumer goods normally. And the problem I have with this, the big problem, if I would be somebody who is doing business in the USA, and see that, the president wants like a local production of certain goods again, that might be a good chance, I still wouldn't act upon this, because I couldn't take the word of Donald Trump that he wants that for granted, because he's notoriously known for changing his mind, not remembering what he said last time, not remembering what he says during his last presidency. So why should I build a business upon that? That is insane. That is not a business plan that you can act upon. So I think they will fall short. And I want to go even further there. And maybe after this, we also change to more intraday things. I don't want to bore you, the audience here, too much with macro outlooks. But nonetheless, I think it's important to address things like this.
But it's very important. I know might be
the thing really. What I'm afraid the most,
boring, but definitely important.
Yeah, is that over the long term, because we're not going to see this investment into local US produce, that the USA is going to lose its most valuable resource, which is human capital, intellectual power. This is what the USA is notoriously known for: intellectual power. They are the motor of at least the Western world when it comes to innovation, right? AI, companies like Apple, Netflix, Amazon, they were all founded in the USA. They all originate from there. Now imagine all those smart people working there. They suddenly say, well, I don't want to work in the US anymore. I'm going somewhere else where I don't face such an anti-education, anti-science environment like here in the USA. I think that's the biggest threat to the USA we're going to face within the next years.
I think Trump, and by the way, guys, let me know if I'm lagging. I'm still running a backtesting software here in the background. It's using up quite a lot of CPU.
You are lagging, yeah.
But I need to run it. I feel like I need to run it, because every hour I'm not running it, I'm missing out.
I know. I was running my laptop hot over the weekends because I was backtesting so much.
Yeah. So I set it to run at like half power, but whatever. I think, I saw that Volvo obviously is a Swedish company making cars, big here in Sweden, and they're wrote something about moving to the US now because it makes more sense from with the tariffs. They're actually moving a lot of their facilities into the US. So that part of the tariffs is actually working as intended, I guess. But it's going to take it's to reset everything for the US economy. It's going to take many years. And the question is, what are the government going to do to make sure that it's not a total catastrophe until that happens? It's going to be very interesting to see how they're going to deal with this, because like you say, they can't just lower the interest rate when inflation is super high. It's obviously going to become quite problematic. But now, of course, what will happen with inflation now that the market is crashing? Because now that the market is crashing, we're going to see, there's going to be a lot of problems coming out of this. So maybe it's going to affect the economy in a way where it will slow down significantly and therefore also slow down inflation. So maybe, but we're talking about many months or maybe even years until the Fed might see inflation at a comfortable level to actually lower the interest rate and see factories being built in America and preparing for this. And then what about after 4 years, after Trump? What if we reset it again? It's just, it's the craziest situation, really. It's a big change in the overall economics of the world markets. Absolutely crazy.
It is. It's like a return to a more local economy from a phase of globalization that we had for the past 35, 40 years.
Oh, look at this. We got the conscious day trader. What's up, man? It's been a while.
Morning.
Haven't seen you in a while, man. Welcome, man. Giannis in comments. Make sure you go to the comment, you click that, and you follow his YouTube channel. Some really, really good content in there, so make sure you check that out.
Also, make sure to leave us a like and a comment. You are really
leave
lagging,
us a
man.
like and give us a follow as well.
That would be appreciated.
Man,
yeah.
it's what a crazy market. What an insane market. I feel like you know what you talked about in the beginning, where you said like you were averaging out, and I also been averaging out of the market, but of course I'm sitting on a bigger portfolio than I would have wanted in this situation.
Absolutely. Same.
Some of the funds in my long-term portfolio that I bought a long time ago, I started averaging into that a long time ago. I pulled up my phone today to look at the value of one of the funds, one of my biggest in the portfolio. I think it's like a global like a global tech fund or something like that, and it's actually in a loss.
Oh yeah.
In
Yeah,
one
I mean,
day,
that's
it gave
the
back
thing about
everything.
tech, no?
Yeah,
I just am at a loss, like on average, on my Nvidia stocks, for example, now as well. What something I never would have thought could happen, because I didn't go in very early, but still, on average around the 90s now, and now I'm like, oh, wow. How fast did this happen? I should have sold, at 140 or 150. In hindsight, of course, always easy to say. But this is what I say, and this is like somehow the dynamics of market nowadays, that you see things happening in 1, 2, 3, or 5 days that usually, like 40, 50 years ago, would have taken 4 weeks or even half a year to take effect. Things are moving so fast. That's why I also say, what we are seeing now on the global markets is a reflection of what the market expect the economy to do 6 months down the road. Yeah, so they are expecting now a heavy recession 6 months down the road, which is in line with what Jonatan said, the yield curve inversion. We've talked about this over and over and over and over again. Coming out of a yield curve inversion is when a recession starts. This is when you're going to see usually the largest effect on the stock markets. Again, I only have here on TradingView the data until the late 80s, but you can go even further back. This indicator is true 100% of the time. Over the course of 100 years, it was always correct. And this yield curve inversion we have been coming out now is the longest I've ever seen during my lifetime. So it's just natural. And it's funny, we're coming out, and look, this was exactly the top of the market when we came out of it. Since then, it all went just downhill. So it could go downhill for a further time. However, be also prepared. It's not going to be probably something like, oh, we are falling now from 5,000 all the way to 3,000 in the S&P 500 within 2 days. At least I hope not. I mean, I don't know. Maybe Donald Trump is going to say, oh, instead of 25%, it's 100% tariffs for the EU now, and everybody else getting 500%. I don't know. But just kidding, of course, guys. But, this also kind of bears a chance, to, if you are willing to, if you see like stocks, and I'm eyeing there especially on the tech stocks that are like just mangled within 3 days by 30%, with the exception of Tesla, by the way, because I think Tesla is going bankrupt. And it could be a good opportunity to have some swing trades in those, where you can also, where you have a beautiful situation. If it's a good company where it makes a lot of revenue, for example, like Nvidia. Mike is not saying now please go and buy Nvidia, but for me this is a good stock. They are on the forefront of what is going to become more and more important, AI, over the next decade or 2 or 3 decades probably. And so if I buy them now at $94 or $90, this is a good chance that it could bounce back to $100 for a swing trade. Even if it doesn't bounce back, I'm willing to say, like, well, I got it like at a discount of 40 or 50% in comparison to the all-time high. I'm willing to hold on to this position if everything goes for the worse for the next couple of years, without having too much pain on, as long as I don't put all of my money, of course, as long as I don't go all in. Yeah, I said Tesla going bankrupt. Please don't quote me on this. I don't want to get sued by Elon. And but it's like, they are down at sales alone here in Germany by 45%. Nobody wants to drive that car anymore. And it's all because of the ego of one guy. I think it's going to go down as one of the worst economic decisions or personal decisions a CEO ever made in the history of economy, basically.
So why? Yeah, it's. I definitely think having Elon as a CEO is risky. He's. I really had respect for him. Like I don't know the guy obviously, so I guess I can't really have his respect for someone I don't really know at all. But like I really liked him. Like I really did support a lot of the things he did, and I remember reading a couple of books on him, especially the biography by someone, I think it was Isaac Walter, I believe, who wrote the that biography on Elon. And I in that book, it was quite clear that the guy had, issues, some personal issues, and very impulsive, right? And definitely created a lot of potential problems for the company that he managed. And now with what he's doing right now is it could go either way. Like it could go to just zero because of his actions, or you start pumping because of some of actions he's doing. But it's a huge risk and a lot of uncertainty. And usually when there's a lot of risk and uncertainty, investors don't like that. Investors do not like the uncertainty that he brings. And but then again, I mean, we got to look at what he's built. He built Tesla. He built SpaceX. He created some of the most advanced rockets out there ever. So I mean, maybe he knows something that we don't know. Most likely he does, or he's just, I don't know.
I don't think so.
Probably not.
I really don't think so. We are talking about it, and when talking about Elon, we need to talk about the US government too. And I just had to roll my eyes this morning when I heard like the latest news that supposedly this whole tariff plan that Donald Trump was presenting, what was it, last Thursday, I think, or what was it, this huge press conference, or Wednesday, that this was like made by ChatGPT.
Yes, I saw the list. I actually had to confirm that. So
it is like,
I actually
did you confirm it, or?
Yes, I actually did go and confirm it, because there was a post that said that the list was categorized after like top level domain names. So you would have a country on there which is an island that is only populated by penguins and there's no humans there, and they've put a 10% tariff on that island. And obviously the reason that island is there is because it obviously had a large language model like ChatGPT create that list for them based on the top level domain for each country, because it was categorized in that way. So for example, they had like this is a very weird list, right? It's a very weird list, and the fact that they put a country or an island on the list with no humans
The
on
Easter
it, and only
Islands,
penguins.
Yeah.
It's just that just go. This is the United States. It's supposed to be one of the most powerful countries out there, especially in the Western world, right? And to have a list that is not checked by actual humans and that is not verified, it tells me like what's going on. What's going on? Like if I made a list like that, I would make sure to actually send it over to an expert or a lawyer or someone saying like, can you check that the countries on this list are actual countries, or can you check that it's like correct? And obviously no one did that.
Yeah.
Which is to me insane. It's absolutely insane. And when I saw that list and I saw the fact that like I confirmed the rumor that it was mostly created by No, I don't think the list was created to close loopholes. Otherwise, all countries on Earth would be on there, right?
Yeah.
Why would you put an island with only penguins? Do you really think people are going to move there to circumvent 10% tariffs? I mean, it's obviously a huge mistake. It's ridiculous, right? Ridiculous. It's crazy. And honestly, like I you know, as someone who like is more probably like more towards being a supporter of Donald Trump than you know not, I think this is absolutely insane, and it just goes to show that the level of professionalism is just laughable.
Yeah, and it's not only that. I mean, if we want to be selfish now and we look at does that really affect us like long term? If you're not a long term investor, maybe it doesn't affect you really long term. It's going to affect you though in your daily life, in your job, in the industry you are working, for sure, 100%. Except you're really just working within a local seller environment, you know, that doesn't have anything to do with import and export, but most of us aren't. For what we are doing here, for what our clients at the 5ers are doing, like the everyday swing trading, the everyday scalping, you might also think, oh, this is not really affecting me. But it is, because it causes, Jonatan said it just now, markets don't like uncertainty. And you can see this especially reflected at an intraday level. And this leads to a situation where very often you have the kind of volatility where even if you might see good setups, you know, they either don't work because, you know, price action doesn't have the necessary time to develop because everything is moving so fast, or the volatility is just too high that you cannot find any entry in the markets where you can say with good conscience, you know, this is a good risk to reward. I think it's very, especially if you're a beginner, not only that, for myself as well. My God, I was sweating bullets from Wednesday to Friday last week because my portfolio was like all over the place, plus minus. When I say all over the place, I mean like plus minus 1.5%, which for me is already all over the place. This is not the type of portfolio volatility that I'm used to, at least not on a daily level, on a monthly for sure. But that really, you know, when you see that, like, oh my God, you know, well, today I lost the money which I could have used to buy a nice apartment in a good city, you know, around the world. Or maybe I gained it the other day. That makes you really think twice if it's worth risking more money, at least on an intraday level at the moment. Because so there's nothing wrong, in my opinion, if you choose for yourself, well, I'm new to this whole game, I have no idea what's happening out there, I'm going to stay at the sidelines at the moment. I think that's totally valid. That is actually probably the smart move, even if you are experienced. However, if you thrive in an environment like this, first of all, I would like to know how you do that, because I want to copy you. And second of all, you might want to risk even less than you usually do. So if you, for example, go in with 1% risk for the moment, I would maybe go in with 0.5% or even just 0.25% risk at the moment per trade. Because especially in assets, like we've seen that in gold before, like what happened in the last days, actually gold was rather behaving conservative, I think, over the last days, not like going that much crazy like other assets out there. But in assets normally like gold, in assets like Bitcoin, in assets I never would have expected, I have to say that, like euro dollar, you have those crazy spikes at the moment. So chances are very high that you get stopped out at a very bad move in a very awkward spot, maybe even with a lot of slippage, especially from Friday to Monday in legacy assets such as gold and euro dollar. How are you handling that at the moment?
Well, okay. So the way I'm handling it is, you know, I did get stopped out on some of my swing positions. I did take profit on some other positions. I would say that this move to downside overall was a loss for me, but not a huge loss. I was happy to be, wait. You're all going to lose free healthcare unless you make deal with Trump. This is an American. 100% you're from America. Let me know in the comments about that.
Yeah,
no. I mean You know, no, the Sweden's free healthcare has nothing to do with America. I can assure you that. Our the Swedish model has been around since before America, since before the United States was funded, and most of European healthcare has been working based on a, I must say, socialistic way before America, and that was, you know, when socialism was cool.
Yeah, we are the socialist day traders here, you know.
Yeah. Yeah. Well, whatever. Okay. But I do pay a lot of taxes for the healthcare. A lot of taxes. Yeah. Okay. So the way I've had. I love it. I love it. Like
great
USA,
the greatest.
I love my American friends. I love you all. I love you all.
We do.
But please have a talk with your president about the tariffs. We just lost Volvo. That's a national treasure right there. It's nothing to joke about. Okay,
so Volvo was sold to the Chinese already a couple of years ago, by the way.
Let's not talk about that.
Ooh, national butthurt.
Yeah,
okay,
that's nothing we talk about.
Laughing innuendo.
Okay, so yeah, how do I deal with the current situation? So the way I dealt with the current situation is I did not trade. I'm not trading short term. Like, there's no way I'm going to trade this. I mean, I didn't trade during COVID because, you know, people, you know, prices are, the spreads and slippage is insane, right? I thrive in stable trends. I thrive when price respects level in a timely and orderly fashion. That's the market I like to be trading. However, from a swing trading point of view, it's very difficult to. I mean, I did take profit on this USD CAD trade before going closer back to entry. So this trade made back a lot of the money that I lost on the other trades, but still at a loss. But I am happy that I did manage to close this one last Thursday. But from a swing trading perspective, I mean, going through the markets here, this is rather. I mean, okay, so we got USD CHF now. Obviously, I would want to buy USD CHF because, you know, I bought USD CHF here. I sold USD CHF here. I bought here again, but got stopped out. But now we're down in this level right here. Like, I would be willing to buy this. You know, I would be willing to take a trade here. We had a massive move to the downside, and I mean, either I get stopped out, or, I mean, to me, when I see moves like this is. And this is the Forex market. This is not the equities market. This is not a stock. This is not the S&P 500. This is USD CHF. It's a Forex market. We go back to the weekly and we zoom out. I mean, yeah, we could have something like this, but then I'll get stopped out. Or this level could be holding like it's done ever since 2015. So the Forex market is a market that is designed to be somewhat stable and somewhat efficient. And if you look at the price ranges here, I mean, it's a 7% move to the downside. So it's fairly stable when you look at other markets, like, you know, look at Nvidia or just S&P 500, right? So buying at these levels on a market that is supposed to return back to its mean, that's kind of like how the Forex market work. It's a mostly ranging market. That makes sense to me. When prices are at a key low, I want to be buying. When they're at the key high, I want to be selling. So USD CHF is one of those assets that, yeah, I'll build a position here. There's no reason for me not to build a position here. We can go even, you know, down to the 1 hour. Yes, it could dump much further, but it's like for me here, it's like a 1.3 hour trade or something like that. Maybe up here, and I could perhaps add to the trade if it keeps moving like this. It's simple. It's one of those trades that I have to take. Otherwise, I'd be not following my plan. It's one of those trades that kind of stands out and it's obvious. Looking at USD CAD, however, not very obvious. This is one of those trades where it's like, yeah, okay, this is not obvious. I can't trade this in the current situations. Looking at Euro USD, also for me, not really tradable. This is not a clear structure. Maybe if we go up here, maybe if we start seeing a rejection here, yeah, then I can, of course, trade it. This Wu guy is like doing everything he can to protect Trump. Like everything, like he closed loopholes, putting tariffs on oddball places. No, he didn't. He had no idea that they put 10% tariffs on penguins. What type of loophole is he trying to cover, putting 10% tariffs on penguins? I'm sorry, but that's not a grandiose plan. That's just making a mistake. I think sometimes we have to agree that, humans, we're all human. We can make mistakes, right? And Trump obviously made a mistake here. For penguins. Okay.
Long penguin.
Euro USD.
That means
Euro USD for me, not tradable. We got a pair like Euro GBP. Now this tradable. This is tradable because we are now at a very, very interesting area. Now, what I'm going to do here, well, we're at a support level that we broke below in May last year. And before breaking that level in May last year, we stayed above it since September 2022. So, and we've tested it last time in August 2024. So this is a major, major level. Now, if this is truly a shift in global trade, I mean. Now, I don't know what the relationship between the euro and the GDP will have in this scenario, but what I see is we are currently seeing on the chart, we're seeing two different macro conditions. And let me explain what I'm seeing. This is condition 1. And this right here is condition 2. So we can have one being red and the other one being green. If Euro GBP is in the green market cycle, then we want to short here. If it switches into the red market cycle, then we want to long once this reclaim, this level has been reclaimed again. Okay, so as long as this level has been is reclaimed, I want to take it down to 0.84. If we see something like this, it is a clue that Euro GBP is entering the market cycle that we were trading in between August 2022 and May 2024 for 2 years. So that's the plan for Euro GBP. Now, this might materialize later in the week, but it's market like these, USD, CHF, and Euro GBP that is right now based on these moves trading at key levels, because it's telling us that what happened right now in the market took us to a key level, a level where the market have to decide, okay? And I'm going to be trading in the direction of whatever the market decides. Is the market deciding that the current situation tells us that Euro GBP is in the lower cycle? Then I'm going to be selling. If price action is telling us that Euro GBP is in the upper cycle, then I'm going to be buying. And all of that will be visible with price action. So I would tell you, I would recommend, not financial advice, obviously, but if you're trading right now and you're looking for swing positions, I would recommend look at pairs that are at a key level. Look at Euro AUD. This is a beautiful example. How often does Euro AUD trade in this level? Well, we traded here in 2020. And then in the financial crisis of 2008, again, we have two different cycles we are watching right here. We have cycle number 1, and then below we have cycle number 2. Which of these cycles are we in? Depending on what cycle we are in, we're going to be either looking for a short or perhaps actually, there's no way I'm going to long this, but the difference between cycle 1 and cycle 2 is we might actually come back down into the previous cycle. So I zoom out, look at the overall cycles of the market, and try to figure out, is the moves that we're seeing now in the market enough to push a Forex pair a Forex currency into a new cycle? And I think, yes, it is. I think if this is truly a reset of global trade, then the dynamics between countries can change drastically and could potentially see some great opportunities. But yeah, zoom out, look at currency pairs that are at important decision points, like Euro NCD, for example. I mean, none of you in here would be surprised if this is the top. If I tell you in 2 weeks or a month, yeah, this was the top for Euro NCD, you would say, yeah, of course it was. So look for those levels, look for those levels. Okay.
Very, very suitable question here from Metin KK. If euro dollar is holding the 0.1, the 1.1 level, that is of course here. I just had a look here at the DXY. For me, very interesting area we're entering right now. And of course, upside down, you're going to see the same for euro dollar, because euro dollar makes up like what, 57 or 60% of a US dollar index. So this level down here right now is like I don't want to call it a support, but a massive area where it's likely that we see, in my opinion, just judging by technicals, not taking other stuff into account, where we could see a turnaround. We bounced off here multiple times. So all this area between 100 and 101, we went all the way down to 100 here, bounced off several times. We were about to enter this now again. So if I have to make a bet, and I can back this up actually with what is going on economy-wise at the moment, it would just be natural if we see a rebound of a US dollar, so a stronger US dollar again I'm not saying like in the upcoming hours or days, this is really a bit longer term. So let's say in the upcoming weeks, which of course means then that we would see euro dollar on the other side. So the picture here is of course the other way around then, sliding down to the downside again. So meaning sliding potentially down below.
It's going to be back here quickly.
Sorry, what? Oh, you went away. Okay, so sliding potentially
down.
Sorry,
I was saying I'll take a quick break.
I understood something else. That's why I was like, I'm not going to repeat what I understood, though.
Oh yeah, okay.
Yeah. Just go and do whatever.
This is live. Things happen live. Let's not rewind that. Okay.
This is why I didn't want to repeat it.
Yeah.
So you see the same picture here in euro dollar, just of course from the other side. So stronger DXY moving up means stronger dollar. Lower euro dollar, of course, means also a stronger US dollar. So I wouldn't be surprised, and that kind of goes in line with what we see economic wise. Like the one thing the Wu guy just now said, like, oh, US is the strongest economy, which of course is true, And since the US is kind of sitting in the share, and everybody worldwide kind of has to react to what we see tariff-wise, trade war-wise now, it should naturally, at least as a first reaction after all the turmoil is done in the market and all the margin calls are processed and the market returns to a more natural behavior again, this should be reflected actually by a stronger US dollar, by a stronger demand for the US dollar, if we really see midterm companies like, for example, Volvo, here, now I can say it again, since Jonatan is not here, can talk about Volvo again, invest into like build manufacturing plants, for example, in the USA. So this could, on a natural level, lead to a stronger US dollar. And I think we see this natural pattern at the moment also kind of reflected in the DXY, in euro dollar, for example, for sure, also in other US dominated Forex pairs here. So I would not so much, honestly speaking, at the moment, look into position into swing trades that favor weaker US dollar. Yeah, we still could see another plunge down. I mean, we beautifully bounced back here on the level of where my upper rectangle is. It's kind of a coincidence, of course. But we could, of course, see something like this first, like try out this area, consolidate a little bit until we bounce back again. But midterm, longer term, so I'm talking about a couple of weeks, a couple of months down the road, I wouldn't so much bet on like a tanking US dollar, for example, euro becoming stronger than the US dollar. Because in euro, there is, in the Eurozone, there are huge implications of this tariffs, like no kidding about it. So, especially Germany being such an export nation, with us especially exporting all of our machinery, all of our cars. This is going to have a huge impact, the tariffs on our country, not because we have to pay the tariffs. The tariffs are still paid by the importer, the US company or individual importing. But of course, it's going to make German products, EU products less attractive. And so we should see that also reflected in the strength of the US dollar. Question here from Hamad. Good to see you, by the way, Hamad. Wanted to say that earlier already when I saw you posting something. Can the heading potential economy slowing in the US and uncertainty in global lead to a higher gold price? Yes. To both, yes, long term. So for gold, we've seen that already reflected. I think you were participating in my workshop I did for ABL Labs last week as well, where I said that this economic phase of stagflation we are seeing in the USA, which probably is going to be prolonged now, because we are through the tariffs for sure going to see inflation rising up higher again. We are at least midterm going to see a stagnant or maybe even lower GDP. So that is the definition then: higher inflation, lower GDP of stagflation. This is an environment where normally commodity prices thrive. So you will see something like gold, you will see something like copper, aluminium, but also agricultural products that need to be imported into the USA rise massively in price. So if I were forced now where to put my money, for example, for the next 1.5 years, I would prefer something, not necessarily gold. I'm not such a friend of gold and has been front running this whole development a lot already, but I would look into other commodities. I would look into agricultural companies. I would also look into, for example, companies that produce, so publicly listed company stocks that produce on a more local level, like the company that, for example, sits somewhere in California and produces its good from Californian goods and sells its goods also within California or any other US states. So that is not dependent on a global supply chain. I think these are companies that in this kind of environment actually can thrive. But we're not talking about trends that are going to establish itself over the course of next days or weeks. These are really long-term trends at the moment. For gold, I want to say also, because I wanted to also look here, of course, a bit. Where do I have my here it is. So let's go down to a lower time frame again, get my indicators. So a little bit about, because obviously you want to talk about day trading and scalping here as well. And what I'm looking at the moment, now last week, you remember I was predominantly looking for trades that were going with a trend, with the bull market trend in gold. I was not so much a contrarian trader there, because I thought the trend is still very strong. I got my paycheck for that actually last week, Wednesday, when I had my first losing trade in a while, bigger losing trade of 0.5% in gold for a while. Managed to get something back from that later on again. However, right now, and we can see that, in my opinion at least, reflected here on a Monday morning, you see gold hovering around its 200 EMA. This is on the 2-minute time frame here. And this is very typical, because everybody is waiting now today what is going to happen later on when the USA come in. So you can expect more volatility coming in again as closer as we get to the opening of the US markets. So the closer it is to, what is that, 2 or 330 CT, 330 I think it is, the more volatility you will probably see again. And then I'm going to wait, either are we going to see a strong breakout, so something like we saw actually this morning or last night here, so a strong move into one direction. In that case, I would play the bounces of the 21 and 50 MA. I don't have those on here because I updated the chart. Going to put this on later. If not, if we kind of see still an uncertainty in direction, what I would like to do then is I would like from my indicators to wait for these confluence signals. So this is from two of my main indicators that I've really been using for years and years and years, and just recently discovered they actually work pretty damn good on gold as well. A strategy where I open trades can also be multiple trades. So sometimes you'll see multiple of those signals into the same direction. And then I trade the return to the moving average. So as soon as we touch or cross the moving average, I would exit this trade. So last trades I would have taken here, I didn't because I was still too early. Would have been a long trade here, a short trade. You can see on both, those would have been very good trades. This is the type of trade, judging by what I see right now in market behavior, I would prefer. If we really see like a trend establishing itself late again, and it could be an uptrend, it could be a downtrend. For gold these days, we really never know. Is it going to behave as a risk off asset? Is it going to behave as a risk on asset? I would then trade the bounce backs of the moving average. It's going to add those later here. The moving averages again I use for that. An indication for that would be really a strong breakout. So either like a nice strong move here to the upside with really a lot of momentum, dynamic. That for me is normally the sign that a trend is going, a short-term trend, we have a 2-minute time frame here, is going to establish itself, or a nice momentum move to the downside here. But behavior like this, where we are just like hovering around the 200 EMA, this is nothing where I need to take a trade at the moment, because it shows that that the market still is indecisive. Like the Europeans, we had the move during the early Asian session here, yeah, from here first down, and then we were bought up, and we didn't have much move during the opening actually of the European session. Very typical. Also, the European are a bit, I'm going to say it now, chicken feet there, and and so I think we're going to see the moves, if at all, today. Where we are going to see the moves, I'm actually pretty certain of that, once we get closer to the opening of the US session. So look again maybe between 1 and 3:30, maybe starting at 1. I think we're going to see the real volatility coming back again. Have you done whatever you wanted to do, Jonatan?
So now that we're seeing, and by the way, let me know if there's any lag or anything like that, and I will have to cancel the back testing. But looking at gold here now, given the fact that gold has been very bullish prior to this, so gold has been bullish in the previous market dynamic, if you will, and will it continue to be bullish, or will we see a shift in gold here? Now, gold, one of the reasons that I believe that gold has been so very bullish, and I think one of the strongest move from gold here happened in March of 2024. Now, this was before before the Trump election and everything. But I believe that gold was rallying because of uncertainty, right? Because of a lot of uncertainty of the future. And now, of course, there's even more uncertainty, but I do feel like, the so-called smart money has kind of already averaged out of the market, preparing for something to happen based on the tariffs and everything, and based on Trump being president. And because of that, I believe gold has been rallying because of the unstable and a lot of uncertainty in the markets, right? But what happens now with gold? Is the gold trade gone? Are we going to see the markets stabilize over the next couple of months and gold perhaps put in the top? Or will we continue to see uncertainty and gold continue its rally? Because if we are going to continue to see uncertainty, then I do not see reason why we would not buy gold here. Did you listen?
I did, but I offed my mic. Sorry, and
okay, sorry.
Very, very quickly, just Hamad said, yeah, no news today, but I still think we are going to see a reaction from US investors today because there's just too much that happened this morning. There's just too much that happened over the weekend.
There are news. I mean, every second there's news now. I mean, what we're seeing now, the Trump tariffs and the action from that and reaction, that's the news.
Regarding your question about long-term gold, I actually was just talking about this when you were away. Like my trades or my investments, or let's say the typical investments that thrive in a phase of stagflation. We are entering a worse area of stagflation than we are already in the USA and our commodity trades. And of course, gold being one of this commodity. My only first of all, I don't like gold. I never lied about that as a long-term investment, at least. And I think gold has front-run this a lot already. So I would more look at other commodities at the moment, maybe copper, maybe aluminium, maybe especially also some agricultural products. And on top of that, if you want to look at stocks that thrive in an environment like this, I think you need to go to the third row. You need to have a look at stocks that are not so engaged in a global supply chain or dependent on a global supply chain. So I said it earlier already, like the local producer somewhere in California that is producing goods from other goods that are produced in California and selling goods in California. There are stocks like this in the USA, and these are stocks that could benefit from this phase of stagflation we might be seeing the next couple of years. Silver, I don't have an opinion on. Silver is like gold on steroids. I have like the ugly little sister of gold. Nickel, also not so much. I'm more looking at for something like aluminium or copper because that's imported a lot also in the USA. But I haven't really looked in depth on it. So maybe ask my opinion again in a couple of weeks about it.
Yeah, no.
I quickly have to go somewhere also. I'll be back in a minute.
Yeah, sure. Do that. And when you're back, I'm getting my coffee because I actually went to get coffee, and then I went up, made coffee, talked with my fiance for 2 minutes, and then I went back into the office. Did I bring the coffee? Of course not. I'm here. I can smell the coffee. You can smell the coffee, but there's no coffee. Coffee's gone. Okay, so I feel a little bit out of sync, you know. I like a little bit out of sync with the market. It feels like I'm not really sure what I should be doing in a scenario like this, you know. And then if you have that feeling like you don't really know what you're supposed to be doing, then do nothing, right? But I am looking at the markets from looking at opportunities, and I want to quickly go through the markets here with you guys. Look at the I got this whole list right here, and I want to quickly scan through the market, and let's see if we can create sort of a scanning procedure here, so I can show you an interesting scanning procedure in TradingView. So what we're going to do here is we're going to start with this list here. This is my main list. Got a little bull on it, beautiful little bull right there. And now I want to see how do we is there any hotkeys to add a pair to a green list? And I believe there is a hotkey to do that. You can see right here, flag USD CHF. That's Alt plus Enter. Okay, and Alt plus Enter, we flag USD CHF, and then we press the space bar to move to the. I used to work it on Sundays. I used to work on Sundays, create these lists, but now I do it like once a week. Probably Monday because there's so much other things I got going on Sundays. So I go through the list using the spacebar like this, and then as soon as I see something interesting, I'm going to press Alt Enter like that, and you see it gets added to the green list. So let's do this. Okay, so we got USD/CHF. Now I'm gonna move through this list rather quickly. We're gonna use the 3-day time frame, and all we care about here is does it make sense? Is this something that I might be trading? You know, so we're gonna be using Alt plus Enter and the spacebar. USD/CHF. Yes. Okay, nothing happened. Why not? Okay, now it works. So that one is good. And you got to be quick when doing this, right? Because you wanna get the feel for the very first. Like you got to be trading based on your very first intuitive feel that you're having of the market that you're watching. Okay, the very first thing that hits you. You know, if you have a feeling of confusion, go to the next chart. If you have a feeling of, okay, this is clear, add it to the green list. Do not think, like we're not in this stage. I'm more interested in letting my intuition do the talking here. Then we'll see what pairs we're gonna have on that green list. We want to make sure we are selective as well. Let's zoom out. Let's zoom out a little bit. Oh, hell yeah. That looks good. Wow, it's incredible. Guess we're adding that one as well. And then we're just going to keep on moving through the list like this. See if we have anything interesting. Welcome back, Dirk.
Hey.
Hey. I'm doing some quick market scanning here. Going through some of the pairs I have in this list. There's quite a few interesting moves here.
My God, look at some of the US stocks pre-market. Like Nvidia, $88 pre-market, crazy. I'm really tempted to buy some pre-market now.
Yeah. Yeah, this is interesting level. Definitely an interesting level here. Okay, so I just went through the list here and I added everything that I like to the green list. So now I've added, you know, everything to the green list, and now it's time to kind of go through the green list once again to see if we can find what's the most interesting pairs of this. And if we find something that is interesting but not perfect, we're going to remove it from the list. Euro AD, that's the one we looked at. Quite like that one. I like that one as well. GBP USD, yeah, this to me. This to me kind of looks like a short. Okay, we'll keep that one. GBP AUD, we have to keep this one as well. GBP CAD looks like a potential long, so we're going to keep that. This one is not very clean, so we're going to remove that one. So here, this is interesting, right? We have a move. Go back to the 3-day. We're gonna mark out this. Let's look at the weekly. Where do we have like weekly levels? Okay, so we do have a level. I guess we have to kind of draw it like this. It's a big level, but actually no, I don't like this. We're gonna remove that one. Because if I see something where I have to think a bit too long, if I have to think a bit too much about what I'm watching, then it's probably too complicated to trade. AUD USD, I don't like it. Okay, AUD CAD. This one I like. Now, this is a good level for me to buy. That is just, it's such an insane candle. This is on the 3-day, but it's like, wow, you know, it's just insane. So that's interesting to me. AUD CHF. Now we're gonna go out to the weekly and like, where are we trading? Is this the all-time low? I don't know. Prices, you know, at least starting from 2004. This is nah, I don't like this. Okay, so we're gonna remove that one. And by doing this process, we are left with, the idea is to have as small of a list as possible. see what we got. CAD CHF. No.
Okay, guys, I did it. I bought Nvidia again just now.
You did it. You bought it.
Yeah.
Okay, you bought Nvidia. Wow. Okay. I'm gonna answer this question just shortly. AD JPY, that one's good. I'm removing USD JPY. AD JPY sits on NCD JPY. Okay, so what are you looking for? Strong bias, trends, entry signals like double tops. So what I'm looking for in my initial scan is USD CHF is a beautiful example. So basically, what I'm looking at is price at an extreme or not? Okay, so if we look at USD CHF here. Is price at a extreme? No, it's not an extreme. It's close, but not yet. But what if we're trading up here? Yeah, if I see this chart when we're trading here, I'm adding it to the list because I want to short this. It's at resistance. It's at the extreme. I want to short this because I think it's going down to the range EQ, and then down to range EQ. We're at the lows. Are we at an extreme? Yes, I'm adding it to the list. I want to go long here. Price goes up. It's at the extreme, adding into the list. I want to go short here. And that's basically what I do. And now, looking at current prices, we're back down at the range lows. We're back down at the extremes, moving it over to the list. That's what I'm looking for. Now, on the next phase of the scan, I zoom in and I look at the daily and I look at the 4-hour, mostly the daily. And I look at what happened last time it hit this level. It created an accumulation range and then a breakout. This is when you had that breakout. If we can find something similar down here, maybe form some type of accumulation range here, maybe a breakout in this week or next week, then I will be buying. And I will be buying the breakout. I'll have stops below the range, and I will be selling at the next level above. Very, very simple. And this works in all markets, and it works particularly well in the Forex market because Forex is... it's almost like the Forex market is designed to be a engine of mean reversion. It's as if you look at the Forex market, you will see that it trades between extremes. Okay, now I'll go get some coffee, and I'll see you in a bit.
You go and get some coffee. Somebody was asking, I saw something about BTC just now. Can I find it still? Let me look here quickly. Here. Void says, the BTC looks like a good local bottom. Yeah, I don't know about this. So the same like on gold, like I said earlier, on Bitcoin, I'm normally looking for stuff like, not really like this though, this were not confluence signals. What I'm a little bit worried about is that from all of my indicators, I got those sell signals in a downtrend directly at the 200 EMA, which normally is a quite good confluence signals that we might be moving deeper. In general, of course, if I look at things here long term, yeah, we are slowly entering an area. This is, by the way, a drawing that stems still from last week, where I said, oh, we're in a bear market. We should see a new lower low. Turned out to be true. So it's more kind of this area here. You can see this support area around 72,000 US dollars, maybe a little bit higher. So instead of a line, we might as well also draw a rectangle there. So let's see something maybe like this. Yeah, that looks more like it. So we're not still quite there. So somewhere between, what is that here, 70,000 and 74,000 US dollars is quite an interesting range. I agree with you that if we stop them, I don't know. I mean, it's high time, of course, that we see a reversal. Also, we are far, far away already now from our moving averages here, especially from the blue one, which is a 8 weeks moving average. So we should sooner or later catch up again. We could, of course, also add here the 200 EMA. I like to use EMAs instead of simple moving averages, by the way. So let's make that one maybe that color, make it also thick, and put it to 200, not 9,200. 200. And that is, of course, then the day one we want. Exactly. Yeah. So 200 EMA at 85,000 at the moment. So yes, sooner or later, of course, this bump to the upside is going to come again. So sooner or later, we are going to see something like this. Question is then, of course, what is going to happen once we are at that 200 EMA. And a lot is going to depend also, in my opinion, on what we are going to really see this afternoon. I said it just now. I bought a couple of NVIDIA pre-market for around what was 84, 85 US dollars, because I think they have been hammered too much. Of course, I'm taking a wild guess there. It's like a gut feeling. Okay, this could be like kind of exaggerated to the downside. We could see a reaction to the upside. Now, the same could be true for Bitcoin. We are going to see that reaction, but in a market like this that is like so exaggerating to the downside, it's the same like we saw when we, for example, saw this move to the upside, where everything was a little bit exaggerated to the upside. But it's, of course, nicer to see, because most people are long Bitcoin, to see those moves to the upside. You never really know where it's stopping. So it's kind of dangerous in a way also to say like, oh, this is the next zone of resistance or support in this case I'm seeing here, so I want to buy there. Because you always might get, first of all, in a situation where you could see the zone not reached. So you could see a bounce off already before that. Maybe this already was, because we were very close to that zone already. So maybe this already was the low. And now we are already bouncing back up to 85. And then everybody's going to jump on board to slow again. Or we are going to enter this area. It's a kind of the same picture. If you remember what I showed you earlier in the DXY, where we had, I don't know where my drawing went, this area between 100 and 101. Let me draw the box very quickly again. So just this area around about where I said also, we touched it, but doesn't necessarily mean we need to go all the way in. So if you are kind of aiming at, I might be tempted to go long Bitcoin, then don't wait, don't try to time the absolute bottom there, except you want to scalp the market. That's a whole different story. But if you're looking for like a bounce back, maybe to 85, maybe even 90,000 US dollars or something like this, by the end of the day, then it really doesn't matter that much if you enter the market at 75 or 74 or 73 or 72,000 US dollars. It's still going to be a good trade. Why is it still going to be a good trade? Because you know that your stop loss probably is going to be somewhere below here. So somewhere, welcome back, Jonatan. So somewhere below this area of support. So maybe at 68 or something. And then even then is questionable, isn't that like already what you could expect as the bottom from a bear market in Bitcoin after what we've seen? But so don't try to time it. It might go further. It might not go further. If you think like, hey, this is a good chance, I want to trade this pullback at least to the 200 EMA, 85,000 US dollars. Well, then having a stop loss here at 69,000 US dollars, trying to enter the market at 75,000 US dollars is still a pretty good risk to reward ratio, in my opinion, for a swing trade. So what I see very often is that people always wait for a lower price until they enter the market. Eventually, you need to put your money where your mouth is. Of course, not if you think like everything is crashing and the whole world is going to zero. But if you think like, hey, this is exaggerated now, I kind of have a hunch feeling, or from my experience, sooner or later there's going to be the bounce back. And if the bounce back is not coming now, well, I'm willing to hold on to that asset for a longer period of time. This only doesn't apply, of course, for Forex pairs, because you pay the swap like every day for that. But for assets where you don't pay a swap, like Bitcoin spot, for example, or a stock, it doesn't really matter. You're not so dependent on really timing your trade and getting out of your trade on time again. If you do that with euro dollar, every day that your trade doesn't succeed, you're going to get a little bit poorer because of the overnight financing, especially when it's a Wednesday or Thursday, no, a Wednesday, because of a settlement plus 2 days always. You're going to pay the whole overnight financing for the weekend as well. So yeah, that is a possible trade, but then really put your money where your mouth is and do not like risk everything. Always have a little bit of cash still in the back of your hand, please. Did you get your coffee, Jonatan?
Yes.
That's very good.
I have my coffee.
Mr. Right.
Mm-hmm. That's right.
Mrs. Always Right.
Yeah, she got that one as well.
I knew it because we have it also at home, but as pillows, not as mugs.
Yeah, it's super boring. But
yeah, this is actually very good, Void, what you are saying. My indicator on Bitcoin is Twitter. Everyone's saying it's so over and it's a buy, then it's a buy signal. Absolutely. There is almost nothing more reliable than Twitter when it comes to crypto. I still remember that so well in 2021 when everybody suddenly had this laser eyes. Maybe you remember that, Jonatan, on Twitter. Everybody was having laser eyes for Bitcoin, and that was very close to the top. And it's the same now if the big accounts out there are talking about, wow, this is bullish, that is bullish, then it's, I'm not saying a high time to get out, but at least to start questioning yourself if you should put in a stop for your position, if you should slowly scale out. It's one of the reasons also why I started scaling out already in December, because I wanted to front run this a little bit, because in those hype moves, they tend to stop like from one day to the other. They don't gradually phase out. They stop all of a sudden, and when the sentiment changes to completely bearish. So you see that over and over again in crypto. Nowadays, surprisingly, you also see that in stocks and in Forex, that the sentiment can like literally change from 1 minute to another minute, from super bullish to super bearish. So I think like at least for long-term, scaling out really is the key here. And looking at something like Twitter, you can measure this, for example, with the Fear and Greed Index in Bitcoin, which is published multiple times per day on Twitter. This is a really good instrument, not for like as your only instrument to decide about a position in Bitcoin, but as something to at least give you an indication, hey, is this like maybe a little bit overheated to the one side? Is the bias very one-sided? Are we in a really FOMO type of area, like when the ETFs came out, or when Bitcoin reached a new all-time high at 8 or 109,000 US dollars? Are we maybe at the moment in a total FUD area? Could that be an indication that at least we're going to see a bounce back of $10,000 or something like this? I know it's difficult, and it's especially difficult if you are thinking about long positions, because you, in your opinion, are going against the majority of the market then. But this is also what deviates a successful investor from a mediocre investor, in my opinion, that you need to be one of the first one to go in and say like, you know what, I'm going to buy this now. I believe in the long-term story. I think this is a good long-term price I'm getting already now again. Who said that again? You have to buy when there's blood on the streets. Was that Rockefeller?
Some people say a Rothschild. Some people say Rockefeller. It's I don't think we really know exactly who said it, but definitely, it's definitely true. You want to buy.
I'm going to say you have to buy when the Satoshis are lying on the street.
Yeah. I'm also a little bit. I mean, I'm looking at Twitter, and I posted a couple of charts on Bitcoin, and let's see where I did post a couple of charts on Twitter saying that basically if Bitcoin, if we're in the bull market, then obviously this 70K region, and I'm gonna open up the new layout here. I have one called clean, this one right here.
I mean, we have now talked about pullbacks and bull markets. We have a pullback now of 32%, which is not unheard of in a bull market for Bitcoin. Absolutely not. But it's also not usual. Usually you see those pullbacks at around 20%. I know that we are trading around the 50 moving average at the moment. It's probably the line you have on your chart there as well. So that could be an indication at least for a small pullback or indicating area for a small pullback. But 32% decline at this phase in the bull market, this late natural cycle phase we should be in, not so sure if we are going to see a return of a bull market, but I hope you can prove me wrong.
You know, I did post a couple of charts and I said, so first of all, we're testing the weekly 50 EMA right here, and we're losing the weekly 50 EMA. Now, we haven't really, I would argue that we haven't really lost it. I wouldn't really say that we lost it here, because we can assume that we have a sort of a buffer zone around here. And an interesting thing that we can do when I talk about, you know, creating a buffer zone, we can actually quite easily do that. Maybe we can do that with the Bollinger Bands as well, but we can also just do it like this. So we got the EMAs here, and then we'll add let's use the 45, and then down here we'll add the 55. So now here is a EMA zone where you have in the middle, you have the 50, and then the upper one is the 45, and the lower one is the 55. And as you can see here, this kind of creates a buffer zone around the 50 EMA. And I would say that this general area right here would be like the bull market support bands, as I know that Dirk talks about, and I believe it's something similar. Now, if we lose this area, then we lose an important moving average that we usually do not lose in a bull market for Bitcoin. And if we add a low right there, you will see that we're actually almost testing the highs that once we broke above with the Trump being elected was when the real move started to the upside. Now, there is still a very real possibility of us coming down into the 70K region and still being in a bull market. And if we are still in a bull market, then I would argue that this is a really, really good time to buy Bitcoin. But it's not the best time to buy Bitcoin. Why is it not the best time to buy Bitcoin? Because we're in the late part of the cycle. Now,
but it's still a nice risk-reward trade, no?
It is. I mean, it is. And I have a lot of people like saying, like on Twitter, and this was, you know, what I wanted to come to with the sentiment, right? You have a lot of people saying, of course, Bitcoin is in a bull market. Of course, Bitcoin is a bull market. We are going to be in a bull market unless we create lower lows on the weekly. Okay, so where's the low on the weekly? That's going to be that one. So a lot of people are saying, okay, we're still in a bull market unless we create lower lows. I would argue that once we create lower lows on the weekly, like this, then I would be ready to say that we're getting close to the low of the bear market. Okay, now let's add the reload zone here. And we're going to be focusing on two levels, the 0.618 and the 0.702. I believe that if we are in the bear market, the bottom of that bear market might come in somewhere in this region, which is somewhere between 35,000 and around 50,000. Now, again, we need to also add the MVRVC score, which is my go-to indicator here when we might want to add this to the other one. Okay, I'm not sure what happened here.
Can you hear me, by the way?
I can hear you, yeah.
Okay, because somehow my cable has a bit of a short circuit, I think, off my mic. I just wanted to add what you said now with a lower low on the weekly also. It doesn't make sense, you know. We are then somewhere at like 44 or 48,000 US dollars. So we are looking already at a more than 50% decline, like a 56 to 58% decline from the all-time high of Bitcoin, which usually falls into the region then of the next bear market bottom. So if you want to wait that long to confirm it's a bear market, well, sorry, then you missed out on like 90% of the game already.
Yeah. Exactly. That's what I'm saying. You have to look at Bitcoin in relationship to other markets. You have to look at Bitcoin as you have to look at Bitcoin in relationship to the S&P 500. So let's do that. Let's add the S&P 500 here. I got so many indicators on here. Where can I find my indicator list? Okay, here. Let's move it to the top. And then we're going to be going to move to new, pin to new right scale. And we can try to figure out regular, and then we can try to see if we can fit S&P 500 on this Bitcoin run here, which would look something like maybe something like this, you know. And I would say that the S&P 500 is pretty much front-running Bitcoin. That's what we saw over the weekend as well. Bitcoin held strong while the S&P 500 dumped over last week, and then yesterday Bitcoin dumped with Ethereum and the rest of the altcoin market, right? So we're looking at Bitcoin here. We're trying to put the S&P 500 on the chart. What's up, Alex? Welcome.
I needed to be in this conversation just because I have rid my bags back on crypto, back down for the fourth or fifth time.
That sucks. I'm sorry to hear that.
Yeah, really. Really sorry.
Doug's there like, yeah, well, I've been taking all my money out at the top.
No, I haven't. I said earlier I took most of it out at 93,000, no? Like December, and then scaled out. I'm still sitting on some, like especially I was hit hard on stocks as well because I got rid of about 50% yet. So I'm looking like at the wins of the last 1.5 years have been eradicated within just 3 days, basically.
Yeah, same here. Here. It's absolutely insane. I mean, I remember last summer like bragging about the fact that I caught the bottom on the stocks, and I'm like, yeah, look at the account, and I'm like, I'm actually in a loss on some of the positions I bought 2 years ago. Like in 1 week, I gave back 2 years of long-term profits, and it's just now I'm lucky that I sold about 50%. So I guess if I buy back now, I'm still gonna get back to the all-time high of the portfolio. But I'm actually more inclined to kind of like sell a little bit more and wait.
Do you know
wait for better
crazy
prices?
Thing is, at the moment, everybody I speak to are loading up now on stocks. Like
I did. I just bought Nvidia during the live stream here again.
Yeah, Nvidia.
But what if this? Okay. So I just wanted to finish what I talked about here. I want to measure from the last top. How long did it take for the MVRVC score to go into the buy zone? So it took last time. It took 210 days. That would put us at August, which is insane because if we look at this chart, then August would be the average days having to top. So it's quite a coincidence, but
yeah, but we were running early with a new all-time high this time during this cycle.
Yes,
The first new all-time high was
much
also
early.
This is kind of what stuck with, what does that mean in the grand scheme of things of this cycle theory? Is this going to overthrow the cycle and everything else following is also going to be a bit early? I'm still questioning myself, and I still also don't say it's out of the window that we see a new all-time high. If you look at other models like the Bitcoin power law model by this crazy Italian physicist Giovanni, who is also very active on Twitter, but don't text him, he's like very emotional if you criticize him. Let me put it like this. And but he's like forecasting a new all-time high for Bitcoin in January 2026 at $200,000. He says like we are so undervalued at the moment. So if you don't load up for these prices, I'm going to in January 2026 stand there and live stream how I laugh at you. And and yeah, I mean, I don't know if he's right. It makes a lot of sense what he's saying there from a mathematical standpoint. Although just being a good physicist or mathematician doesn't make you a good investor necessarily.
Look at this though. I'm a bit. This is a bit troubling to me.
It's decaying alpha, pure decaying alpha. What you're showing there.
Yeah, this is actually very troubling, because it might mean that if we are wrong with this being a recession, then it might mean that the yield curve inversion might not be true this time, and maybe not anymore. And it might mean that indicators like the MVRV C-score or the C-score overall might be we're entering a cycle where it's not going to be we can't use it anymore. It's the edge is not there.
Which also would kind of make sense, playing the devil's advocate now, because we are talking about maturing asset here. Like it used to be like a niche asset, not a lot of people with the big bags, like the true institutional investors were looking at it. Those that usually front run big trends, because they have more insights than the average retail investor. And I count myself to the average retail investor. They see things and have the money to see things that we necessarily do not see. And of course, it makes sense that they are front running this now as well. And that the models that used to work until now suddenly do not work anymore. That we, that we are in a phase now, or we are going into a phase where we need to come up with a new model to describe this. What we are seeing.
Yeah, and I'm looking forward to seeing a possible new model for this. I think it's we need it. I started looking at this in 2017. We are not in 2017 anymore. We're not even close to the market cycle and the dynamics that we were in 2017. I remember like it's so insane to be sitting here and thinking, talking about Trump, talking about nation states adopting Bitcoin, and actually talking about how the president of the United States are talking about creating a reserve, which he kind of did. But he definitely dropped the ball on that one. Like he created I don't know what he did. That was just insane. And now Conor McGregor is launching a shitcoin as well.
Yeah, it's like he's like so anti-cyclic, like at the worst time possible. He wants to do that, and then the announcement he made was like, what is that?
Yeah, let's launch a rug poll. When should we do that? Let's wait for a recession.
Hey, let's get a hot tour girl on board for that.
Oh my god, the timing of that.
McGregor is funny though, because seriously, bro, like I don't think the amount of people talking about crypto has dropped off. Yeah. The interest has not been there for months, and now he's coming up. It was probably there just before Trump got elected. Everybody was so bullish on what was going to happen, and Trump was going to come in and he was going to do tax-free on crypto and all of this stuff. And yeah, he hasn't given us tax-free. He's just, halved our bags, so.
Yeah, definitely took her money and
yeah, that's nonsense. The thing, though. Buy the rumor, sell the fact. It's always like this.
My God, whenever I sit down, like LJ, whenever I say LJ in the comments, I'm like reminding myself of sitting straight. Oh man, you gotta hit me up on WhatsApp. You gotta send me that. You gotta send me that picture. Have to.
But by the way, talking about retail interest, like in Bitcoin. It's kind of funny, like if you look at Google search trends, for example, there has been much less retail interest in Bitcoin or cryptocurrencies than during the last cycles in this cycle.
Which is interesting because institutional money is all-time high into crypto.
Yeah,
it's bizarre.
It is.
Man, I'm typing again. Did you hear that? Did you hear my typing?
No,
I didn't.
You didn't? Wow, okay. Good.
Finally got
Because I was
one of
typing
those
very
soft
lightly.
keyboards.
I do have a soft. You know what I did? I cleaned my desk over the weekend, and it's looking so good, man. Looking so good.
I'm quite happy I cannot point my camera onto my desk. I mean, I could, but I don't think you would survive it if I do that. Like the
I'm so
amount of
proud of
paper
my
that is
office.
like,
It
and
looks-
notes and post-its that is like hanging around me.
I like my office. This is like a place where I want to be. Like I want to be here. I love it here. My office is like my
your shrine.
my happy place. My happy place. Sometimes
that
a
it's
very
in your-
dark place.
What is a shrine?
What?
A shrine. Because he prays to the gods of money and volatile.
I love it how it's in
but
a
you know, it's
basement as
the-
well. I can just imagine you just like, my precious, like looking at the chart.
yeah, turn down the light. It's all red lights in here, and I got my coffee.
The
AUD
mini
USD
toy
looks
car
like
of Volvo, my precious.
Yeah, I'm listening to my own voice. Listening to the live stream. It's like, yes, Jonatan, you're so good. You're so good with your analysis.
When you get a visitor, by accident, one of your live streams or videos is playing very loud on a monitor, and you have autographs lying around.
Yeah, I don't get visitors. That's a long time ago. They have stopped appearing. They have stopped visiting me.
Check
This is me in the
AUD
markets.
USD, Jonathan.
ADUC.
Yeah, I was a little
we're
bit
actually
early
looking
this
at
morning on
my
it, but I think now it's starting to have a little bit of a retracement. Go on the 5-minute.
Well, okay. So what I'm liking. Well, let's start with the weekly. So what I like here is the fact that we're obviously at a decision point. Yeah, I mean, I think what I like here is the fact that we got that wick. So, ICT would be proud. We took out liquidity to the upside. We took out liquidity to the downside. This is manipulation going on in the market right now. Yeah. So we manipulated to the downside. We manipulated to the upside, and now it's ready to, move. I believe up. So I think we got a good level here.
I was way early.
Okay, so you shouldn't ask us, man. You should go to forexfactory.com, check for yourself if there's any high impact news event. You should do that every day, and make sure that you're looking at the Forex Factory as well, because that's what the risk team at The5ers is looking at. But yeah, AUD, I think we're gonna go higher. We have a low time frame breakout as well. Yeah, I think we might move higher. But then, sure, we don't have any red folder news today, but the whole day is a red folder day. It's we don't really know what's gonna happen with on the US Open. We don't really know. People are still trying to understand what happened, last week, and trying to understand how they should position themselves. And like Dirk said, you said you had talks with previous colleagues, and they said that there could potentially be a lot of margin calls coming into effect on some really big players in the space, and that would cause even more volatility.
Could be, could have been, of course, that some of that stuff we already saw on Friday as well. And but they are on the edge, to say the least, really. You know how it is when the bank is fearing that they are not going to see their money again. They are going to send out the people virtually to get their money back, no matter the cost. Alex, have you been looking at gold today?
I was looking. I was long, lower time frame on gold. But I'm still looking for higher, to be honest. I can show you what I'm looking at and why.
But it doesn't really make sense for me, what we saw from gold the last couple of days. Such a weird move. Sometimes risk on, sometimes risk off move. But then again, the same in a lot of currency pairs also. It's just all over the place.
And so I'm just looking at that, you know. We've had like that Quasimodo type of pattern on a level. One, like a shoulder, you got the shoulder here, break above, acceptance above the range, that kind of like what do you call the bloody line? Is that called? That's called a trend line, indeed. Yeah, a trend line. And then it can't break below, and now it looks like it's actually coming back up. So I'll be looking. I do think it's going to come up and hit that 200 EMA and fill in all of this gap here. The only thing is I'm out on the day. I've hit my daily stop, my mental daily stop, not an actual daily stop on a prop firm, but
So make sure it's the mental, not the real one.
It's the mental one. It's you can't. But I was actually longing earlier today.
Sorry, that sounds so bad. I hit my mental stop.
I hit my mental.
I cannot take anymore.
No, I was long this morning, and it was way too early. So I was long this, and then obviously it got taken out, and whatever. Yeah, doubled down. Quite interesting. Interesting morning, but gold is definitely.
I wonder if Michael is watching the live streams. Michael.
Yeah,
Michael is sending all of these things in the group chat on WhatsApp. He is going crazy.
Extremely.
I'm like he would probably vote for Biden.
You know, I've never known a person hate Trump more than Michael.
But not in our WhatsApp chat, right?
No, he's strictly professional in the live streams. Don't bring that hate into the live streams. But he's definitely borderline. He has posted a T-shirt. That's actually quite funny. I'm gonna bring that up.
What are you looking at, Dirk?
Yeah, I was of course looking at gold as well. Let me maybe.
And it's also found really nice support on a 21 EMA on the daily.
Yeah, for me, it's more the structure we are seeing really since Europe opened this morning. You know, we have this extended range of not doing anything really on the 2-minute chart at least, which I'm looking at. So for me, clear indication that everybody is waiting. What is the USA going to do later? Is there going to be volatility? And if there is, a good momentum move, and good momentum move would be something like what we saw, for example, here. Then I would play the game again of wait for the move, wait for the pullback to the 21 EMA or 50 EMA and go long into the direction of a trend. So the classic one that has been working beautifully on most days, I have to say. Last week I was getting hammered by that, of course, also on one day. If we see more like of the uncertainty, I have to say, then I rather would look like do it a little bit like I want to call it Petro style. Look for the extremes, which would be indicated here by confluence long and confluence short, and then I would play the game of returning to the 200 EMA. Yeah. But I don't know yet. Is it going to be a trending day? Is it going to be a volatile ranging day? You know.
I got caught out just because I was on low time frames while it was consolidating. So 1 minute type stop losses consolidating took me out, and that's
but that's the thing, you know, because you always see the change first on the lower time frame, and if you look like at a 50-minute and 1 hour, you see, hey, it's a strong trend still, but the structure is already changing on 5 minutes, 1 minute. You're going to get caught.
You're gonna get chopped,
you know. But you know, this is what we have those stops or mental stops for.
Yeah, and then eventually it does play out, but as long as you've got enough ammo for that particular day to get back in and get all everything back and then some, that's all.
Yeah, exactly. Yeah.
Michael, how are we doing?
I heard my name mentioned in vain.
Yeah, we were talking about how extreme.
How much I love Trump. How much I love Trump. Yeah, honestly, the guy is he's my idol, genuinely. He's my idol.
You know, I do look at him as like my great-grandfather kind of figure.
Yeah. Goodbye is quite
Uncle
quite disrespectful.
Papa Trump, Papa T, Big T.
Yeah, yep. Trumpy dumpy saddle noble. Trumpy dumpy made it all full.
Did you actually sing that to your children?
Yes.
Okay.
By the way, I just took this.
Wow, so you're like
short
indoctrinating them
scalp
at
trade
an
on Bitcoin,
early
yeah.
age.
Absolutely. Absolutely.
So what were you saying, Dirk? BTC, is that BTC on it?
Yeah, I just took this scalp short trade on BTC, but with a very low risk because we're not that far.
Okay, I gotta
away
get
from
some
the
lunch,
200
guys.
we made.
I'll be back. I'll be back later.
Yeah, sure.
Let's have a look at the volume.
I'm going to make a move now as well because I also want to eat some pizza. My wife.
Pizza. Nice. I like pizza. Well, I'm gonna eat chicken kebab.
That
Chicken
is also very
kebab.
That
with
is like
chicken feet.
the most popular food in
Chicken is the most popular feet.
food in Berlin.
Definitely.
Döner.
Doner kebab. Yeah, I like that. Good stuff. Good stuff. Why is it called doner kebab? Is it just because of chicken? No, it's not chicken, is it?
No, normally it's not chicken. Normally it's like veal,
Lamb,
like the
no?
classic one, or lamb. Yeah, but here usually you get like some minced beef meat. It's not very good, or chicken. Which
Yeah.
I prefer.
Buddy.
Here we just call it kebab. Like we don't call it doner kebab. It's just kebab.
See, doner kebab, that's lamb, isn't it? Like really in the UK, but it's really bad lamb. It's like all the bad bits.
It's like the smelly parts of a lamb.
Yeah, it's not like here where I live here, you get like the good meat, good juicy meat. But in the UK, a little bit of doner kebab with mint sauce. The mint sauce just hides the fact that it's super bad.
What is this with mint sauce, by the way, in the UK? Always.
Mint sauce on lamb.
No, it's just
Mint sauce. Do you mean actual mint?
No, it's like mint. You've got mint sauce, and then you've got mint jelly that you put on like lamb, mint jelly, roasted.
But it doesn't taste mint, does it?
Yes.
Well,
and it's parts of the reason why the UK cooking cuisine is so popular all around the world.
Oh yeah, super
really
popular. And our economy is booming. Clearly.
If you eat beans on bread, you shouldn't have the right to
Now, beans on toast. It's not beans on bread. Gosh, beans on toast.
I'm out. Take care.
It's God. Get rid of the guy who says beans on bread. Nobody says beans on bread.
Bread.
Yeah, beans on bread.
All right, guys. I gotta make a move too. Have a good one. See you later. Maybe. Take care.
See you later.
Beans
It's a shame.
bread.
It's a shame. A shame that I didn't wait, Michael.
It's a
It is a shame, didn't I? And I know you said, and I just jumped in without even looking. And then I, doubled down. And
why have we got no music?
Mate,
I just
I know. Where's the music?
Never put some music.
Never,
What is this show?
doesn't put music. This is why the ABL squad are in, because we pop it, we make it.
This is it.
Happening, even though we're not actually in a trade. I should be in this trade. I should be.
I'm looking.
Should be in this trade.
I'm looking to go nuts. Would
have been a lovely trade right now.
I have decided I'm going to return to my wild times because I made a foolish error with an EA this morning. If you watched the AlphaBeta Lab stream, you'd have seen that I opened up an EA with 1% risk instead of my normal 2.2% risk, and I blew my account on gold. So I am going to my live account.
Oh gosh.
To my live broker account.
Michael.
Yeah.
Can you send me your 5ers email address, please, on what?
Yes. And I'm going to use something which I haven't used for a while, and it's called the margin trader. Have you heard about the margin trader?
It sounds super bad.
It's something that I think we need to get Alex into, because it's the only thing that is going to give him the adrenaline rush that he so desperately seeks.
Do you know what? Oh, jeez. Look, I love just looking at all of these trades that I had the feeling. I had the feeling, guys. This morning I looked it up and they just talked to me and they said, long. That's what they said to me in my ear. I could feel it. I felt it. Long. And I longed.
Yeah, what happened?
Right time. It's a little bit too trigger happy, boys.
Right, I'm going to send you a link, and you'll see what I'm talking about. Margin trader. It's crazy. Watch the video.
I would, mate. I'm waiting for a little payout. I'm being exactly,
Maya. Exactly. Right. Let's get LJ knows it. Right. Let's just get some energy in here. I know Jonathan brings up all the energy, but you know, it's like let's have some music. You know.
Yeah.
Let's have some vibes.
Here is a trade in its natural habitat.
Oh dear. So what's been happening, guys? I see chicken tikka masalas going on, and my extreme left tendencies. I'm actually very centrist.
You have got.
I'm centre left.
Extreme left propaganda on your Twitter.
I wouldn't go say so.
I would say so.
I would say it's just somebody that lives close to the Ukrainian border.
Fair enough.
Interesting. I did find out that there are people out there that believe that pigeons aren't pigeons. That pigeons aren't real. I did find that out today.
Pigeons are not real.
Yeah. Like genuinely, there is somebody out there that Haresh just. I own a cafe. Of course, there's coffee. It's like it's the only thing.
I feel so bad for the woman that is sharing a room with me today. I just feel so bad for her.
Did you fart?
I didn't. We do not call it that word. Do not say that word here. But I'm gonna have to do so.
Oh dear. Alex has to go and fumigate his room. Alex has to turn on the aircon.
Everybody comes in. Oh, it smells so sweet in here. Yes, it does.
It's not because of Alex.
Victoria's Secret.
Why have you got a Victoria's Secret body spray?
The smell. I love the smell. Wow, that was a lovely setup. And no, I didn't take it because it's not something that I look at, but that is actually a really lovely setup. Yeah, couldn't break the lows, took out all of these areas, got acceptance above the EMAs, retest onto a 50. Hamed. Oh my god. To the T, baby. That would have been to the T. That's a beautiful setup.
To be Billy, just go and Google margin trader EA and find it on Forex Factory, and you'll see what it's all about. Not something you use on a prop firm ever. Go and open up a broker account, live broker account with like $20 and just watch it fly. It is like a compound tool.
Sounds super bad.
Yes, this sort of thing that you should really get into.
Yeah.
Honestly, you will watch the video that I've just sent you on WhatsApp and you will see. And it is the kind of thing that is made for Alex.
Oh, this was just such a nice setup. It was just way too early.
On what?
On AUD USD.
I still think gold is going to sell.
No. Yeah, but it's long.
It is long, but it's still going to sell before it goes long.
Yeah, but it's long now.
No. No, it's
We
not.
should do a poll. I'm going to do a poll, guys.
Do a poll. But it's not. It's not long yet.
I can't do a poll. Not sorry. We're not doing a poll, but we're going to say anybody, whatever you think, if gold is long or short.
Tell us what you think. But it's
What in
it's
the
going to go
degen
short before
is
it goes
this
long.
mic? I want to find this one.
What in the degen is this, Mike? What degen? Oh, LJ, check it out, man. Just watch the YouTube channel. Don't listen to the music on it because it will make your head explode. But just watch the video and watch how it works.
That's like old school RuneScape. Music when you're going out into the wilderness with your Bissell whip.
If
you know,
if you catch a trend trade, right, it will genuinely just explode your account in a good way.
What is this?
This is an EA, seriously. You can't see anything; it's all blurred. Get a better camera, would you? This is what is that? That's just you're just sharing blurriness. It's utter blurriness. Guys, all you got to do, yeah, look at that. Just watch it. It basically Alex just destroyed his camera. Oh dear.
Oh god, you can see up my nose.
Short.
My nose again. I keep doing nose shots.
Thank you, guys.
Oh. Beg your pardon, guys. My camera, you have to.
The syrup of danger.
Yeah, I really could not recommend anybody try out that email. Apologize, Michael.
Look, as I said, open up a live broker account with $20, nothing more, right? And you're prepared to lose that $20.
Should we do it on live on stream?
Go on then, on the $5 stream.
Just gonna have to fill it. Go on FX Pro. Does it go on C Trader?
No, it's empty.
I'm doing it. So I've only got FX Pro on C Trader.
Well, that's not very good, is it?
You could do it on yours.
I could do it on mine. Right, I've got a 17. I've got
whoever's in gold. I respect you. You are the man or the woman.
Gold what?
Gold long. Look at AUD long.
Not long. Gold is not long.
Gold is moving up. It's long. Look at it.
It's not.
Michael.
Not.
Michael.
Nope.
Michael.
Nope.
Michael.
Nope.
What is this thing? What does this look like? What does this look like to you?
It looks short.
It looks like a Quasimodo.
Oh, you and your quasi. Don't even try and steal Victor's thunder with your quasi talk.
This hurts me.
Look at the 1 hour. Look at the 1 hour.
Don't know what that is.
Look at the 1 hour on gold. Not on Aussie. 1 hour on gold.
Michael, that looks like it's going up.
Doesn't. It cannot break past the 21 EMA.
Alexander.
Let's do it. It's going up right now. It is going up right now, but it's going to sell. And it's going to sell now.
No, the momentum's already.
No. Sell it. Sell that gold. Sell it.
Sell it from 40. I do not believe in such things. Maybe that. Ugh. So, Michael, are you showing us this? Are we doing this margin thing?
Yeah, hang on. I'm just setting it up. I can get it working. There you go. There you go, guys. It's coming down.
Wait, are you longing or shorting?
I'm shorting. Told you. Did you hear that? Did you hear that? Targets have been set.
Is that what it says?
Boom. And it just adds more as you go down. Yeah. When the margin increases because you're in profit, it then goes whoop, and you get a little coin noise. Look, it's gonna sell. Yeah, okay, it's not gonna sell.
I don't think nobody's allowed to talk about AUD anymore. On stream.
Silly boy.
Michael. It's long, mate.
It's short. Okay. It's short.
Where does it get to for you to say that's it?
I don't care. It's shorting. I don't care.
What in that price action tells you it's short?
Many things. The fact that it can't break the 1 hour 21 EMA, the fact that it is dropping like a stone like that on the 5 minute, multiple reasons.
Yeah, I'm with Hamid on this.
15 minute.
15 minutes.
Yeah, no.
If you had your EMAs on, Michael, you would see.
Yeah, I know. I know it's a long way away from the 15 minute, but it's just been chopping, and it's been leaving a nice little bit of liquidity down below. We're going to watch it as every time it goes, chung, it's going to add in another position. It goes, chung.
So wait, hold on a
coin.
This works every time it goes down. It adds an extra position.
Mm-hmm. As the margin, as you go into profit, and you hit a certain mark. There we go. There's another one. Just adding more positions, maximizing my profit. Uses the margin to trade. That's why you don't.
Idea, though. Actually,
you don't.
If you
there you go.
If you actually use it.
Yes. Use it on a tiny little account, tiny little live account, where if you're prepared to lose $20 and you can turn that $20 into loads, because as it starts to go in the trend, it then opens up more positions because it uses the margin that's available from the profit that you're making. You see, not so silly now, is it?
But yeah, if it's on the wrong way around, if it's on the wrong way.
Yeah. Semantics. See, so every time. Okay, so it hits my stop loss. And now it's probably gonna sell. Motherfucker. Damn it. I didn't say that.
This is crazy stuff.
This is honestly,
it
works.
I kind of want to get it.
You do. I told you it was an Alex EA. It was an EA just for Alex. Look at it, and it's selling now. Damn you. You sell.
Only you had an extra 20 to put in there.
Yeah. Yeah. It's now going to sell as well. No money. It is selling as well now.
It's
Told you. I told you.
but that kind of candle isn't.
I told you it would sell.
Oh my god, guys. It's melting.
Told you. Told you.
It is melting, guys. More importantly, that's my pension. I took out. I noticed like about 4 months ago, and my pension was stuck in some random paths. You know, these different things. So I took it out. There was a button. There was 2 options: take it all out and reinvest it into the S&P, or reinvest all of the new bits that you add. And I was just like, you know what, S&P, you know.
I'm in my 20s. I don't need a retirement fund. What do I need a retirement for when I'm 20?
Put it right at the top, didn't I? All of it.
It's all gone. It's all gone.
Wee! Like, wee! This is how I want, you know, Alex's pension. Wee!
Alex doesn't need a pension.
I need a pension. Got simulated.
What did I tell you about gold? What did I tell you?
Michael, let's have a look
What
at
did I tell
it.
you? What did I tell you about gold?
It is literally done a break and retest.
No, it hasn't. It's making a nice engulfing candle to the downside on the 11-minute.
This is what I
Made
want.
a nice engulfing candle on the 5-minute.
I want a dead cat bounce on crypto. That's what I want. Give me a little bit of something so I can get out of this bloody asset. Oh, I'm really down on it. On ETH.
ETH is just
ETH, I'm proper down on ETH. And I haven't even got a stop loss on that. I'm an investor. I am an official investor of ETH. Solana, I'm also now an investor. In the long term.
Come on, gold. Would you start selling to prove me right? Honestly.
If only I didn't use up. I might. I don't know.
Yeah, Trump said we're going to be tired of winning.
Yeah, 50. I agree. 52. Yes, sir.
There is liquidity at 44. I agree, but there is a load of liquidity down at 17, 15, 14, 13. Big old trail of it. Which is why I think is going to sell. Just gotta give it time, boys and girls. Just gotta give it time. If this 1 minute candle on gold right now wicks down, sells are in. Mark my words. You heard it here first. Adil, I admit it is not for beginners, right? But if you get in on a trending trade and you are willing to stick $10 into an account, honestly, it can just go.
Oh god. You have to download it. Is it for free?
It's an EA for free, yeah.
I'm willing to stick 20 quid in it.
Yeah, there we go. I knew we'd get him. I knew we'd get him.
I have to open up a
You just need an MT5 account or MT4.
Yeah, but I have to stick 20 quid in the.
Into whatever live account. Yeah. Inside bar on the 1 minute is gonna either get left behind or is gonna get taken.
Am I actually doing this for this bloody EA? Gotta get the good old
Guys,
CC.
guys, you know what this is? This is a demonstration of how easy it is to convince Alex to do something. This is how easy it is.
I can only put 100.
Forget about market manipulation. This is Alex manipulation right here. All right, this is me doing a little carrot to Alex and saying, Alex, go try the money, go try the money maker, go put your money in. And Alex is like, yeah, okay. After 5 minutes of no, I'm not doing it. He's in.
Okay, can you send me the EA, please?
Yes.
What's it
I
called?
certainly can.
Margin.
Margin Trader EA. I had it open on a tab somewhere here. Hang on. Where are you?
Oh no, I haven't.
There you go.
Create new account. Raw or standard?
And it's open Alex manipulation. It really is, guys.
Hedging or netting? Hedging. No, yes, hedging. He only does 1 to 30 though. Can only do 1 to 30 leverage.
You see, you want maximum leverage.
Yeah.
Maximum leverage. Yeah, exactly, Ned.
How about my
The owner of the EA hates Trump. That's all I know. I'm not the owner, if that's what you mean. It's all a bit of fun, Henry. This isn't financial advice. This is all for entertainment purposes. But whilst we're waiting for Alex to get his act together and pull all that up, there is some really important stuff that we do need to talk to you about. So, back.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
That's right. Get in on it as soon as you can, guys.
Well, I'm not going to get banned on my broker for using it, am I?
I don't know. I use it on Black Ball. Let's be realistic.
That would be very, very.
Let's be realistic. Your broker wants your money. They don't care how they get it from you.
That's true. That is actually very true, yes.
Alex getting banned on his broker confused me and I lost my chain of thought. AlphaBeta Lab. That way. In there. Is that the link? Am I pointing at it? I think I'm pointing at it. The AlphaBeta Lab, guys. What?
I want to get in just before they had the breakout on gold. I want to go long on gold.
Go on then.
I've got to wait for it to load.
AlphaBeta Lab, guys. It is the community by traders for traders, education by traders for traders. It is completely for free, and you'll find me in there, along with Alex being a little bit more serious than I am right now, because this is all just entertainment. But AlphaBeta Lab is our, in all seriousness, is our community that we've set up with Alex to basically bring some education, no fluff, no nonsense, but from real traders, real people sharing their real experiences. It's entirely for free. There's a really great community in there. We've got over 700 people in there now. So make sure you check it out. Right now, I can tell you we have got, I will tell you right now, we have got 706 people in there. 706 people. So yeah, get in there. Let us know what you think. We do live streams every day as well. So yeah.
So
Description: Alex and Mike bring dynamic real-time execution combined with technical breakdowns of the day's most volatile moves. Actual, let me introduce you to Margin Trader EA. Oh dear. Do not use it, guys, on any Fivers account.
Really,
do not use it on a proper account, because it can literally, it will open up positions without you even realizing it. Okay, so do please be careful. I don't know. You thought it was a good idea. In the meantime, we'll come to EU in a second, Vinny. Don't worry. We will do some proper trading stuff. But we are currently live here on the Fivers Monday to Thursday, and Jonatan really wants to do Fridays as well. I think he's because he's kind of bored on a Friday. So if you guys wouldn't mind just liking and subscribing the channel, it'd be a nice little pick me up. It would give him a bit of a confidence boost and just make him feel a little bit better about himself. You know, Jonathan, he's actually very, very shy and very, very, you know, he doesn't have much confidence at all. So if you could just, you know, like and subscribe to the channel, and the more people that do it, the more likely we are to be able to do Friday sessions as well, which we know you guys really want. That's what you want, isn't it? So Raphael, you can do it on any broker. The best brokers are the ones with high leverage, because it's going to use your margin to open up positions. So every time you go into profit,
not use this. I don't know how do you get the AA on NT5?
Just to add it, right click on it and click add chart, add to chart.
No, but
open up a chart.
Put it on the actual MT5. I'm such a noob when it comes to MT5.
Oh, you got to save it in the settings. All right, I'll do it for you later. I'll do it for you later, and we'll come back tomorrow and we'll show everyone.
I want to do it now. I've got an opportunity right now to look at it.
Well, I'm not going to be able to talk you through the installation process.
Okay, I'm doing it. Margin trader.
Look at that! Look at that sell on gold. I told you gold was going to sell.
I just wanted to get in right now.
Told you it was going to sell. I said gold is going to sell. And what did it do? Sold. But this is what happens. You see, you get eaten up, as you can see here. Dun, 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 dun. So that's why you only put $20, whatever you're willing to risk. Don't put more than that in. And if you can catch a run, you can really catch something very, very nice. You can change the positions. Make sure you have add automatically. And it will just add positions. So, that gold move. Look at it. It is going. Let's get rid of that trade history. There we go. Look at it. It's going to sell, guys. I told you it was going to sell. Look at the 15-minute on gold. Just that thing is selling. Let's get back to the chat. But yeah, guys, go and like the stream, subscribe, like and subscribe. Let's give Jonatan something nice to cheer about. Yeah, literally not moving. Oh, is that not moving? Amin, it is moving. Yes, you can use it on any broker. It's the key to open gate to
Yeah, I'm still struggling how to do this. Okay, so I go on file, open data folder. Okay,
Yes.
I've got the data folder. Now I go on to
Put it in the data
Zip.
folder. No, you got to go
Right.
first into M. Yeah,
MQL4.
you've chosen the wrong one. You got MT4 or MT5?
MT5. I've told you. See how long I haven't been on MT5.
This is a trader, guys, who can easily distinguish the difference between the number 4 and the number 5.
You'd be surprised. Margin.
Oh man, that is selling. I'm telling you, that is selling.
I want to get it. I want to get in there before the margin trader EA. Thank you.
Yeah, there's loads of versions of it out there. But anyway, let me pull up the other chart because mine, I haven't got time to put money into it. I haven't got money to put in money into it. So mine is down, but gold, I'm telling you, gold is going to go like that. It's going to come and take this. It's going to go like that. It's going to go like that. Like that. It's going. It's going. It is going to go long. Don't get me wrong. It is going to go long because you got all this lovely liquidity up here. But it's going to come and take this.
MT5 is so annoying. MT5 is proper annoying.
It is a bit, isn't it? That would have been a really nice trade. That one there didn't catch this one. Let's just go have a look. What happened on? Was it Friday? That one there. Look at that one. Oh, it would have been such a nice trade. Could have just left it running. Well, I'd left that running. Let's open it up so I can see it. Look at that. If I'd taken it down to the lows, because there was loads of liquidity down below, and it could have been a 10R. It could have been a beautiful trade. But alas, it was not meant to be. GU shorts. Everyone's talking about GU. It's GU. Alex likes a bit of GU.
I do like
GU shorts on the 15-minute. Yes. I can see that. What does the Dixie look like? Is the Dixie reaffirming that? Yes. Yeah, I can see that. GU shorts look good. Yeah. Nice. It's broken out of these lows. And you've got these liquidity levels down further below. So, GU shorts, and we've still got double bottoms down below as well. Equal double bottoms down here. So, makes sense. It's not bouncing as I thought it would. Somehow the dollar has gained strength. I think that's more just because the pound was so strong for so long. Pedro did a short on Aussie. We don't talk about Aussie, Pedro. It's a sore subject for Alex. Looks like
yes,
a nice area.
Mary Jane is what I just downloaded. Margin Trader Zip.
Yeah.
Yeah, that's what I downloaded.
Can we have tech support to Alex's room, please? Tech support to Alex's room.
MQ4.
MQ5.
It's not there. You sent me the exact link, huh?
I sent you the link to the forum. I didn't send you the exact link.
Can you send me the link to the exact thing?
Look, I sent you the link to the forum.
Where's the
Right.
exact? Wants me to go in there, guys, and he wants me to do all the hard work, finding what to do.
I don't know. Right, here we go. Right. My goodness. I have to do everything for him, guys. There you go. There's the link.
Okay, thank you very much.
All right. I'm learning about trading, guys. Those live are helpful.
You're not learning about trading. Please do not learn.
Don't learn from us. At least don't learn from Alex. Don't learn from me. Don't learn from me. I'm just here for the comedy value. That's really all I'm here for. Long AU, long gold. LJ, you're just saying that to tease me. Just to tease me. EJ on a short. Yeah, still ranging on the 1 minute. I'd be careful. Stuck in a range at the moment. Hasn't broken out of this structure here yet, so I'd be careful. I don't know what you're trying to sell, but wise move, Pedro. Wise move, very wise move. That margin thingy could be cool on S&P 500 long with micro orders. Exactly, Ned. Exactly. It has got value, genuinely. But if you look at what it says on the very first page about it, it literally says at the very beginning, a very serious warning. So that should tell you that it's not for the light-hearted. But it is risking very, very small amounts for big potential gains. That's the idea. I'm honestly, the fact that I've got Alex so wired up about this is just making me, honestly, it's just so funny.
Log into the account. That's all I'm do. Log in. All I want to do, and gold is still moving up.
No, it's not. Is it? Oh, it is. It is as well.
So many good opportunities.
Why is gold moving up? It's not supposed to do that. I didn't agree to that. It's got that there. I didn't look at that. No, that's not a wick.
I know gold
This
is
one here.
Gold is popping up without us, guys.
It's this one here. It's going for that. Oh dear. That's what it's going for. I was wrong. You won't hear many people say that on this stream, guys, but I was wrong. Gold is not going down. Alex is set up on the 15-minute.
I can't log into the MT5. Michael, can I just give you my password and stuff and you just do it? Seriously?
I need the MT5 for whatever broker it is you want.
No, you can just... I'll give you the logins and you just do it.
Yeah.
I don't want you to go long. Okay.
Yeah, but okay, so right, hang on, because I haven't got that EA installed on that MT5 that you want me to install it on. Connect. This could be interesting, guys. Alex has given me his live account. This could be a moment that he lives to regret, or it could be a moment where he's like, Mike, I owe you everything.
I think the server is m5.real.
Let's see.
Is it logging in for you?
Hang on. I've only got a real. There's no such server as real.
You have to put it in manually.
No. Won't let me log in. Are you sure this is an actual account?
Yes.
No.
FX Pro, guys, is crap. Do not go to
Boo-boo. Oh, hang on. Right. Nope.
No, it's you just got to. Oh, I'm in. I'm in. Oh, oh, gold. We're getting on there. Okay, first I need to get the EA on there though.
Exactly.
And gold is pushing.
If it makes 2,000%, you do, right, Ned? Exactly. This is the lifetime chance. I'm not so sure about that.
Okay.
I don't even know how much money he's got in that account, guys. So
$100.
Ooh. Let me close that MT5. It's always good to have the native MT5 installed on your machine, guys, because then you can just jump into it straight away. You don't have to use the broker provided ones necessarily.
That's funny though. I can't. Okay, so I'm gonna save as visors, margin trader. Okay, now I'm gonna close it. It should be there. We've still got an opportunity to go long.
He's still looking at it, guys.
Yeah, I don't know. It's not coming up.
Oh dear, guys. What do we want to look at? Let's go do some actual trading stuff, shall we? EU actually looked like a long earlier, but that didn't play out at all. That would have been a nice short at the 50. Taking it down back into this nice area. That would have been a nice sell opportunity. Going long, yeah, you see, but Raphael, you can't blame me on that one. That's not my fault. I'm not taking responsibility for that one. You blamed me for your positions last week. Yeah, just enter them. Alex, if you want to get in on gold, just enter a position manually.
Fair enough. I want to use this specific indicator though.
Don't forget to right click and refresh under expert advisors. I don't know why I have this feeling. Whatever trade Alex will trade now, Mike will trade opposite trades. I can't, Maya. I can't. I've literally got no accounts to trade right now. Not readily available for me to actively get into and start trading. I'd need to go in, dig out logins and stuff like that. So nothing easily tradable right now, sadly.
Guys, I am such a noob with this thing. I don't know what to do.
Guys, should we do a tech support session on the live The5ers stream to help Alex install an EA on his MT5? Oh dear. What's gold doing? Gold is going higher. Gold is going higher.
Of course, gold is going higher.
Taking this.
Okay.
Right. Have you? Can you see it in your EAs?
No. So expert advisors.
Yeah. Right click on it.
Go on to, yeah, I'm on it.
Yeah. Right click on it.
Okay.
Right click on expert advisors.
Yeah.
Right. And refresh.
That's what I did.
Oh, okay. All right. We can't see that.
Okay. So if I do open data folder.
Yeah. We can't see what you're doing now.
Okay. So I open up data folder, open up MQL5. then
Yes.
experts, advisors,
Yes.
and it's there.
Right. Let me go and check what I've got. MQL, experts. No, I've got it just in experts. Don't put it in advisors, just put it in experts. Let me see if I can just get the actual file for you. Maybe that will help. You've also got to put other files elsewhere as well. In like sounds and images.
No, whatever, man. I'm just gonna just lot it. I don't think I can log one line. I can't one line 2.5. I can't even do that.
Nasdaq. I'll pull up Nasdaq for you, Amit. Don't worry.
This is awful. 1 to 30 leverage on a. Okay, guys. I think this is terribly failed. I'm going to not waste my time on this anymore.
Those of you who know how to use MT5 and know how to install an EA, you can go and try Margin Trader for a bit of fun.
Yeah.
Bit of fun, bit of giggles. Not financial advice, just entertainment.
Yeah, that's not the idea of. That wasn't the idea of this whole.
Yeah. LJ, do you know LJ? You know what you're doing. Alex, watch. LJ is going to have installed it by tomorrow, and he is going to be. The problem is LJ. There's a bunch of image files and a bunch of sound files that he needs to put into other folders, and that's
No way.
that's asking too much.
No way am I doing that.
Asking too much. For entertainment, go to a casino. This is like going
to
to
a
a
guy
casino.
that makes money of looking at lines on a chart.
Where's GU retracing to? Down here. I would say it's either going to take this level or it's going to rebound away from it. It's probably coming down to here. I would say down to this area. If I was gonna put money on it, or it might stop at this 8 hour, but that's looking less convincing. This is an interesting area here. The 27.8 looks like an interesting area, Raphael. LJ, tomorrow I want to see you with that EA on your MT5 in the ABL session tomorrow morning, and we're going to see that LJ is just literally like a millionaire overnight, because he'll have installed it and he will have traded gold on it, and he'll just be like, he'll be there with like gold chains around his neck and gold bracelets and watches and rings and everything, gold glasses that Elton John would be envious of.
I'm just going to go and trade. On FX Pro. We've whacked in, guys. We've whacked in $100 into FX
Into
Pro.
gold.
Okay.
But
how much can we ride this right now?
I'm telling you, it will come back down to retest. The only thing is, there's no news today. At least no scheduled news.
I haven't even got enough leverage in this account to do anything. I can't even do. I can't. The UK is ridiculous. Can't do anything in this account.
Nate, Come to AlphaBeta Lab. Go to the AlphaBeta Lab and join us there in that community. There's a whole bunch of 101 basics by one of our esteemed members, Daniel, and he does a great course on it. Go in there and have a look. He's got a whole load of content in the 101 basics channel, and there is a lot of content there that can help you get started. And yes, Forex Uncensored, well said. Start with baby pips as well. Get started there. Don't try and watch random YouTubes or anything else. Go and spend a bit of time, just understand what trading is and how it works and that sort of stuff, and then start watching streams like this, because streams like this are just going to give you FOMO, and they're just going to get you all excited and want to trade, which is fine. But if you're a new person to trading, getting in at this market right now, you'll either be crying tears of joy or tears of laughter, but most likely tears of laughter and tears of misery. Baby Pips is a website. Prior planning prevents. Yeah, exactly. Thank you, Rob. Can't say it all. I've got to watch my language.
What I'm going to do, I'm going to average down into this position.
Average down. Scruffy would be proud of you.
Would it? That'll be £1. That'll make 98p.
And trade on a demo account. Also good advice, Henry.
Yeah.
Here we go. This is now trading. This is now trading advice. Now we're getting back to trading stuff rather than that madness of the EA. Yeah.
I still think we're going to get an actual pop on this, to be fair.
Run it short EU. There goes GU.
Ooh.
There she goes.
Yeah.
Raphael, keep it clean. We can't post that. How long do you have streams like this? Because I'm really enjoying this. James, you have hit the nail on the head. When Alex and I are here together, then it's just pure classic entertainment. We are here every Monday to Thursday. As a live stream, we're here every Monday to Thursday with a whole bunch of us. Alex and I are just two of the guys who do it, and girls. So we have a whole host of people. We have Victor, we have Jonatan, we have Deanna, we have Dirk, who was on earlier, we have Jonatan, I think I said Jonatan, we have Anastasia, we have Griff, we have a bunch of other people that Jonathan's going to shout at me for not mentioning, but we've got a whole bunch of people. And so we do Monday to Thursday from 9:30 GMT.
2 seconds.
9:30 GMT until 3:30 GMT, I think it's, or 3 p.m. GMT. So live every Monday. Oh, that's horrible layout. There we go. Live every Monday to Thursday, and Jonatan would really, really like to do Fridays as well. So make sure you like and subscribe and share and all that stuff, because it'd make him happy. You back again?
Yes. You're getting off in a minute. I was just double checking that is still on.
Oh, look at that. It took that liquidity. Beautiful. Ned, because not everybody wants to share their entire face. Victor likes a bit of privacy, and we all respect him for that. So I currently do every day, Monday, Tuesday, Wednesday, 11:30 GMT to 1 p.m. GMT. And Thursdays I do from the very start with Anastasia for the first 2 hours. And then we usually have our AlphaBeta Lab podcast after that. But this week, there's something special happening. We're not doing the AlphaBeta Lab podcast. We're doing something different, but I'm going to leave that for Jonatan to tell you guys about. Speak of the devil.
Yeah, we got Scruffy. Yes.
Oh, there you go.
The Scruffy trader, Gary Langley, coming on.
Yeah, I'm looking at CHF on a low time frame, long, mate. I don't know what you're looking at. Whoever said that.
CHF JP1.
Yeah, I'm looking at that long. Easy long.
All right, guys, let's make sure to hit the like it.
Told you guys,
Like it.
He wants likes. He wants likes, and he wants subscribes, and he wants shares.
Man, it's lagging so much.
Yeah, you are a bit laggy.
Aren't we?
Yeah, I got this algo, this backtesting software running in the background. This awesome
Alex.
product that I got setting
Alex,
up here, developing.
We really need Jonatan to get in on Margin Trader.
Okay, do you want to show him? You want to show him what we were trying to put up?
Where's Margin Trader?
I could give him access to the account, but I don't really feel like wasting $100 to be honest now.
Margin Trader EA, Jonatan, is on Forex Factory. Okay, I'll send you the link, and you can find out for yourself. It's an EA on MT5. There's also an MT4 version. I'll send you the exact link for the MT5 one, which is just there. Just don't use it on a 5ers account. Use it on like a live broker account.
You would definitely get banned if you use.
Why would I get banned? Oh, because many people are using it.
No, because basically the way it works is it uses as you take a position, right? You go into profit. That profit then increases your margin, and then it opens up another position. So you trade it on like say a $20 or $100 account, and you're just prepared to lose that money. And it just
No, I don't want to do it. That sounds ridiculous. I don't want to do that.
Yeah, it is pretty ridiculous, but it
I don't want to do it. I got my own algos. I got my own algos. I don't care.
But I couldn't.
nice one, Trading Edge.
Well done, Trading Edge.
Congratulations.
That is very good. Now it's but now it's actually the hard work, yeah, and the easy part, unfortunately, is the.
No, Henry, I don't need to update my CPU. I'm actually I got a pretty good CPU. I got like 16 threads, but I'm running a quite advanced software that has been running for the last 5 days, and it has created 4,500,000 strategies. It's a machine learning software that is testing different combinations of things. I'm not gonna say the name because there's edge in this, but it's quite. So I'm actually setting up a server, setting up a 24-hour server that is going to run, developing these algorithms in the back end.
I'm going to leave you guys. I've got a very big important meeting.
$100 in there and see if I can use this $100 as like a swinging experiment to see if I can just.
You're going to lose it. I mean, you're going to lose it.
I'm going to use what? Lose what? $100.
You're going to lose the money. You put money into the margin trader, and you're going to lose it all.
No, but it's not in the margin trader. It's in C trader.
Oh, you're thinking about a trade.
Bye, guys.
Yeah, definitely. This is a good trade right here. Just go all in. I would go all in if I were you.
You can't even go all in. You can't even go all in on this. It's 1 to 30. 1 to 30.
Aren't you supposed to be with Mike?
Yes. See you in a minute.
Yes. All right. Take care.
Michael.
mic's on. Okay. I shaved half my face the other day because, okay, listen. You can see I got all look like I'm. You're still here. We're still here. Okay, I think you're muted.
Yes. I'm jumping in there in a minute. Mike's already in there. Nobody's in there yet. No, but I put the $100 in there just to do this margin trader thing, but it didn't work. So now I might as well just leave the $100 in there and just use it as like a swing trading experiment. Anyway, see you in a bit.
Yeah, take care. Okay, so yesterday. Now was yesterday. I don't know when. Someday, I'm gonna share something. Let me share my screen. Let me share my window. Let me share my trading view. Where are you, trading view? Here you are. My trading view. I'm in the bathroom, shaving. I do, the way I do it is I start shaving this side, and then it's like I do this, and then I do half my face, right? I do one half and then the other half. I do the half of the face. It broke. My shaving device or whatever it's called, it broke. So I'm like, all right, I guess I have to go to the store with half my face shaved. I go to the store looking like a clown. They don't have it. I go to the next store. They don't have it. I have to order one. It says it's gonna be there in a week. Well, so I've got to go around with half my face shaved for a week. Finally arrived today. Yep. And that, ladies and gentlemen, is the pro tip from a pro trader. Make sure that you have backups. It's like if you lose an account, you gotta have a backup account, right? Lose one, you keep the other. Henry, yeah, that would be quite embarrassing, wouldn't it? Michael is sending me that EA. We don't do that here around here. This guy again.
We were literally doing that in here. We were basically sending everyone the EA and stuff, but it was not.
Oh, in the live stream. We were sending it in the comments.
No, we were, just obviously with a disclaimer not to ever use it.
Okay.
Yeah.
Let's try not to do that. Let's try not to tell people to download shit, download EAs and stuff. Like let's try not to do that.
Keep it good.
Yeah.
Let's
what are you doing? Aren't you supposed to be in a meeting?
Michael's in the meeting.
All right, Michael's in the meeting. Good. There's no need for you in the meeting then. Okay. So we're looking at ADUC. ADUC is putting in a bottom. I think we're seeing a bottom formation here. We have a break and retest on the lower time frames as well. Beautiful break and retest. Still, we had a break and retest here though, right before we gap down. So, I don't know. I want to show you something. Interesting. Let me show you. I'm working on an EA, and it's pretty cool. When you don't send
the other EAs, but Jonathan's EA is totally fine.
Oh yeah, definitely.
Oh, yeah.
Definitely. Let's bring it up. It's pretty interesting. I'm gonna start applying it to a bootcamp account. So you can see right here, I got a bootcamp account. This is on MT5, right? And I got a NAS 100 NAS 1 hour breakout strategy. I believe that's the one. And then you can actually, it's pretty cool with MetaTrader. You can kind of use the visual mode here to, I think this is the one. Let me see if this is actually the one and see if it opens up something here. Okay, let me see. Gonna share the new one.
Quite interesting what Dirk had to say in the group there, didn't it? About those, about the guys in UBS.
Yeah, definitely.
Interesting.
I'm gonna see if this is the one. So basically, this is a range breakout system, and I just want to look at the journal here to see if we are getting any error messages. I know it's not going to start. Okay, so that's the wrong one. So the idea is based on this, right? This is got the Nasdaq on the 1 hour at a specific time of the day. It looks back a specific numbers of candles, and then it looks at the high and the low of that range. And the high and the low of those ranges are, the green line is the upper range, and the red line is the lower range. And it's placing a buy stop above and a sell stop below with a 1-to-1 risk to reward. And it does that once every day, and then at the end of the US session it closes all positions and removes all orders, and it's going to take one trade like that every day. Now I do have a few ES that I'm testing. That is obviously the wrong one, so I'm going to share with you another one. Just give me a second here. Yes, I think it's this one. So just give me a second and I will share this. Well, let's see if this one starts producing any orders. It come in shortly.
Scruffy is coming in on Wednesday or Thursday. The chart's
Man,
not
it's
showing, yeah?
placing the wrong orders again. Okay, never mind. I will plan this and I will show you once I have something to actually show you. Pretty cool. Okay, let's go back to trading view here. We're gonna look at AUD, USD. I'm also gonna see if I can open up any. See if I have any trades that open up.
I think it'll be interesting what the equity market will look like today as well.
Yeah. That's right, we got Deanna coming on today as well. Yeah, Deanna is supposed to be on here at in like 20 minutes. And then I'm gonna do a trader interview as well. I love those trader interviews. It's really cool to be able to speak to all of these successful traders, and it's like when I'm doing the interviews, I'm asking questions that I want the answer to, you know, like, yeah. It's like, yeah, like I'm it's like having a conversation with someone and they're showing something cool, and I'm like, I want to do this. Like, can you teach me how to do this, you know?
How I remember,
and some of them are
I was doing an interview with Scruffy, first time I ever met him, and instantly got off on the right foot because he was a fib trader and I was a fib trader as well, and we're like, you use fibs? Yeah, I use fibs. You use fibs? And we were like, we just looked at each other and was just like, you're the best, man. You're the best trader we've got. No, but that's
it's fun when you talk to someone and you realize you're just using the same strategies. Okay, we're gonna look at gold. Let's look at gold. We're getting a lot of questions on the gold. So I guess that's what we're. Yeah. Okay. Is this
long? Yeah. Go on the lower time.
You know what we're doing on Wednesday? Something really cool happening on Wednesday. We're gonna do a trading challenge. It's gonna be Alex and Mike versus me and Victor. It's gonna be ABL versus the 5ers. And then next week, I got something really cool. We have something really cool lined up. Hopefully, everything is set up for that to happen. I'm thinking about having a trading competition where it's gonna be 3 against 3, 5ers versus ABL. We're gonna have first the knockout rounds, since we're gonna have those people that win gonna go to semifinals, and then we have the actual finals. Of course I will win. We all know that. The interesting thing is seeing who will come in at the second place. That's gonna be interesting. Okay, so looking at gold now, I think the question on everyone's mind is, will the rally on gold continue? Or have we seen the top for gold, and now that we're switching into a new market theme, a new market cycle, does that also mean that gold is switching into a new market cycle? Or is the new market cycle that we're seeing just a new phase in the previous cycle, the same cycle but a new phase? And then how does gold react in this phase? My first impression says buy gold. Okay, that's the first idea I'm getting when I'm looking at gold. I think this is a good level to buy. Will it go lower? Maybe, but is it a good level to buy? Yes, I think this is a good level to buy. Is it the best level to buy? No, obviously not. Many more levels out there, many more good levels to buy, but I think that is it's front running that level. You know, a lot of times we see when gold breaks out, it breaks out before below a level, it comes down and front runs the level. It means that there's a lot of interest in this level right here in that breakout level, the untested breakout level. Was that a good buy? I believe it was a very, very good buy. Do I want long gold? Like, kind of, I don't know. Do I? Maybe. Not sure how to structure this. And usually when I start thinking in those terms, it's probably best to let it be. But I'm gonna do a poll. I'm gonna do a poll with all of you, and I'm gonna ask you if you are bullish or bearish on gold. Let me know in the comments if you're bullish on gold, why. If you're bearish on gold, why. Let me know. I want to see all your analysis and thoughts on gold in the comment section. And then while we wait for that, I'm going to ask you a question. I'm going to do a poll. Just waiting for... It's lagging so much. Sanders, I think, hopefully I pronounced that right, is bearish. Trading Edge says bearish till 3018. Bearish till 3018. Let's look at 3018. Yes, we're talking about more of a intraday probably position. 3018. Now, I'm not sure if you're looking at what chart you're looking at, if you're looking at futures or if we're looking at the same spot price, but let's assume that we're looking at that price. I'm not sure if it's that the level you're looking at. Okay, Matt saying bearish, Harris saying bullish.
Yep, we're long.
Okay. I don't know. Like, I feel like I'm not really sure where we are with with gold.
Invert.
What do you think?
Let's have a look. Let's have a look on an inverted chart.
Well, looking at the inverted chart won't change anything here. It doesn't change anything.
No, on a lower time frame, not on a big time frame. We don't care about big time frames in this chart.
Okay, so look at the 5 minutes.
Yeah, it doesn't really help, does it?
It doesn't really help much because it's such a clear range. Now, what I'm thinking when I'm looking at this, I'm looking at, yeah, we're probably going to see move down to this level as support, and then we flip it, yeah, up here to see that as resistance. So I guess one of the trades that we could be looking at is this. And now that we have a level, let's see if we can find. This is our bias. Now we want to find as many indicators as possible to confirm the bias, and we will simply ignore everything else. So what we're going to do is we're going to look at gold, and we're going to look at the futures market. What is gold on the futures market? What is that? What's the ticker? What's
gold.
the ticker?
Gold.
Yeah, you don't think I did that? Is it, what's the actual? What's the actual ticket for the futures market? Come on, guys.
First, take it off Oanda because you got Oanda checked.
Thank you. Okay, that makes sense. Okay, gold futures. Thank you. We're looking at COMEX. Okay, so let's see. We're gonna put on some volume tools here. Is this the OBV? Yeah, that's the OBV. Okay, let's look at the 15 minutes. We got the ADX as well. What else do we want to look at? We want to look at.
You got divergence. Got divergence.
On what
On
time
the
frame?
5 minute.
5 minutes.
You got divergence. Yeah.
Yeah, I guess ADX works with that as well. Okay, let's put the. So what is the best indicators to look at when you're looking at divergence? It's gotta be a oscillator. So that would be the stochastics RSI. Let's put the MACD on there as well. Okay, so we got the MACD, we got stochastics. Let's put in the RSI as well. Actually, yeah, okay. Gonna look at the 15 minutes.
Yeah, I think we're just gonna have to wait till New York opens, guys.
Yeah, we don't. Well, we do sort of have a. Kinda have a divergence on the RSI in a sense. Well, yeah, kinda, but I guess it's very unclear. Okay, let's look at the volume because I think the volume is more fun to look at. Where's the OBV? I got it right here. Yeah, like literally, like it's not telling me anything. I can't find anything here. Okay, so ADX is actually breaking out here. Seeing a decent move here on.
Oh, you like? Oh, yeah, pop it up on the screen.
Yeah, that was a good one. Who is that? It must be LT. Who?
OJ.
Yeah. Okay, so ADX is sort of breaking out here with price. Let's look at. We have volume. Oh, there's so many things on here. I mean, this is. I feel like it's almost untradeable. been in a range all day, like a low time frame range all day. Is there any trades out there, guys? Let me know in the comments. I want to take a trade. Gotta make sure we find something here. My trigger finger is itchy. Let me know, guys. Give me some signals in the comments. Give me some of those trading signals. You're unmuted. Okay, I'm gonna mute him. All right, man. I'm tired today, you know. My son came in the middle of the night, standing next to me like a ghost, making cat sounds. And I wake up, you know, like, what on earth is happening here now? And he just stares at me, making cat sounds. I'm like, what are you doing? Go to bed, you know? And he's like, I don't want to. So I follow him, and I sit down, and then I fall asleep in his bed, which is like tiny bed. And yeah, information that I guess nobody asked for. But yeah, tired today. It's difficult to trade when you're tired. Okay, Harris, what are you talking about? We got a pull breakout on 5-minute chart with 4-hour trend direction, high time frames, waiting for it. Okay, I think he's talking about gold. Let's take a look at that. A 5-minute pull breakout. Yeah, well, no, this is not really a. I think you're referring to this as a flagpole, and I would think that it's not really. Not really. I don't see it. I'm sorry. Okay, sorry, this is the most boring. Yeah, Alex is on mute. I did mute you, Alex. Yeah, you're muted on your microphone as well.
Apparently, people are spoofing the book on Bitcoin, from what Dirk is saying.
Oh, that's...
Which is a sign that they're trying to bring it down, guys.
Yeah. I would say that now is a good opportunity to do that. There's definitely reasons to do so. Oh. Okay, I need to take a break. No, not break. A trade. I need to take a trade. Or I'm gonna break.
Sounds like
a breakdown.
Coffee fix.
There's certain things that coffee cannot fix, and one of those things would definitely be the urge to take a trade. The only thing that works is just taking a trade.
Yeah, I don't think today we haven't got much momentum at the moment. Which is quite,
I mean, we got
boring.
the US Open, but that's like... Yeah.
That's in an hour.
Yeah. 1.5 hour, yeah.
Yeah, an hour and a half.
Okay, so I'm gonna do an experiment here. We're gonna do an experiment. Do we have a heat map? Okay, do TradingView has a heat map? It does, right?
Indeed.
Yeah, here we go. That's a heat map. Not crypto. It doesn't have a heat map for Forex, does it? Okay. We're gonna look up a Forex heat map. It does have a heat map for Forex. Why did I not? Okay, let's go to stocks, and then it should be. Let's see. A lot of red in here. Okay, well, we do have a heat map right here. Okay, let me open that up quickly.
How are we positioning our long-term portfolios?
Long-term portfolio. Okay, so long-term portfolio. Now we gotta split that up in
you need more copy, dude.
Yeah. Okay, so what I'm thinking is we got stocks and we got crypto, and crypto and stocks, obviously they're both risk assets, so it's kind of like goes somewhat in the same basket. So the way I'm positioned in my long-term portfolio is I'm completely out of the crypto market, and I've been so for quite some time. I'm not really interested in getting into altcoins at this time. I am interested in seeing a big move down on crypto before I do that, and especially Bitcoin and maybe Ethereum. When it comes to long-term equities, I am not buying individual stocks. I'm only buying like indices and funds. So what I like doing also is looking at leverage ETFs. So a leverage ETF on the S&P 500, for example. I'm looking at getting into a 3 times leverage ETF on the S&P 500, and I will start averaging into that in the next coming months. So long-term portfolio is make sure that you have a lot of ammunition to buy in these markets, because it's times like these when money is made. Obviously money is being lost, but us smart people, the knowledgeable investors, right, as I like to see ourselves, we have somewhat known that something like this might have happened, because we've been very fortunate with the markets in the last few years, I would say. So you would think that most of us would have averaged out at this time, and that means we have a lot of ammunition to go back into the markets, which I will be doing.
What smart person would have done that?
I can't hear what you're saying when you're not in the microphone.
I wonder what smart person would have done that.
I did that, and Dirk did that, and you did so as well, I believe.
Yeah, but not everything.
Yeah, but no one sold everything. That's just not how it works. You average out and you average in. And I did sell all of my Bitcoin, but I mean, you can never time the top. That's just not how it works, you know. RS says, look at GBP CHF I posted on Discord. Okay, let's look at that. GBP CHF. GBP CHF. You know what? I'm not even gonna go into Discord, because I got hundreds of notifications, hundreds and hundreds and hundreds. Where did you post that? GBP CHF. Where did you post that? I mean, there's tens of thousands of people in there. I have no idea. Okay, here we go. Yeah, I don't know, man. I just want to go lay down on the couch, if I'm gonna be honest. Okay, so we have a heat map right here, and what I'm gonna do now is I will cover my eyes. Okay, I'll cover my eyes, and I will point at the screen. Okay, and there we go.
Dirk, save me. Save
And
me.
where I have
Save me from this
my
doctrine.
okay, so it's NCD CHF. My finger is on NCD CHF. We are going to trade NCD CHF. Okay, now
I'm going long gold now, guys.
Love
Really?
Love it.
Yeah, really.
okay. I guess we're trading gold then.
Just a small position though, very small one.
Okay.
But
All
it's like, wait, you have been shorting gold or what just now?
No. I looked at gold and I said like, there's no trade here. There's nothing to do. And then you long. Okay, so what's your perspective here?
No, it's just a hunch, honestly speaking. That's why I only took like a very small position, and it's just like we saw a little bit of
Dirk
upward
has a
momentum.
hunch.
here.
Now this is interesting.
Yeah, I know it was a hunch. And, so we're coming back to the 200 EMA here. I have a bit of feeling we could see it moving up now that we are getting closer to the US session. So I entered here, just super small position. Should we go down like to the area of the 3020, I'm going to exit the trade again. It's just, sometimes you feel like you have been sitting on your hands all day and you need to do something. I did a good Bitcoin trade just now, a short trade that I opened earlier during the live stream and closed, but I haven't done anything on my $5ers account for days and days and days already.
Dirk, did you actually find out if it was actually proper spoofing though? You could see the orders getting lifted, or was it?
No, I couldn't see that on Bitcoin. That was and but I noticed like the
Welcome,
order
Deanna.
book. Hi Deanna.
Good morning.
The order book was like you had this array of the same orders, and normally this is an indication somebody wants to drive up the price, then sell on you, and then dump it into oblivion. But I don't know. No, nothing happened really to the downside very much. Nothing to the upside. So it could have been also like a tactic. Somebody got a large OTC order, which they took the risk for, this is how it's done nowadays. You are like some big guy wanting to sell Bitcoin or any other equity. So you call your bank, say, hey, which price are you giving me? Okay, this one. And then the risk goes over to the bank or to the OTC desk, and they have to make sure to defend their commission by getting a better price than they gave to the client on the markets. And they can do that by creating artificial order blocks to kind of protect, I need to sell, so I'm going to create artificial demand by adding a lot of buy orders into the order block, so people become afraid of shorting in that precise moment. And once you're done with selling your order, then you just take out the orders.
That's an interesting tactic.
Yeah, it's an old stockbroker's tactic. Back then in the German days of me stockbroking, we called those how is it called in English? Icebergs. Yeah.
Right.
That's how they do it. Manipulations.
All right, Deanna, welcome. How's everything? And I see that you have a new background, you got a desk and everything. Looks very, very nice.
I think it's the same background. I'm like zoomed out today for some reason. So I'm in the same situation. You just can see
All
more
right.
today.
Well, it looks great.
Thank you.
Okay,
How's everybody doing? Good morning, Vinicius. Good morning, Marina. Good to see everybody in the chat. Welcome back. Looks to be an
Now, I
exciting...
am very interested Sorry, I think there's a lag here. I gotta, you know what? I gotta turn this thing off, see if it works.
I think you're still backtesting, Jonatan, right?
But it has been running for 5 days now, straight.
What in the world are you backtesting there, really?
It's not backtest, it's more like strategy development. It's a machine learning algorithm that is running millions of different combinations of different strategies, and then it's trying to.
You shouldn't run that on a on a home GPU.
No, I'm actually ordering a server. I'm gonna order but it needs to be quite powerful. It needs to have like it runs on CPUs. It needs to have
you can
like
spend an insane money of money on AWS, like.
And
I
that
think
is
I
what
spent
I'm doing. No, I'm
like tens of
getting
thousands on renting GPUs from them. Yeah.
But yeah, that's right. I can rent it. But I'm buying my own server.
Nice.
Replace it here. Have it 24/7. It needs to have a powerful CPU, everything. But yeah, of course, you know, we're spending a lot of money to make money. That's how it is. Hopefully, like I'm spending a lot of money to hopefully find something. Alex, you seem very engaged today.
I'm just checking. I don't know.
Deanna, I'm very interested to hear what you are thinking about the whole situation here with and then with Nasdaq and the indices. How you're going to play this on the US Open? This is I'm gonna say it's a historic moment. It's a historic day. It's the weekly candle that we're seeing here on the S&P 500. We did have one that was bigger during COVID, but I feel like this is in terms of market structure, this feels big. Big.
I think it's an important day, and a lot of people have a lot of opinions on what's going to happen. I think one way or another, it will be an interesting day. It'll be a day that we remember for a long time. Just like if you were trading around COVID, you might have had opinions around that time, and maybe your opinions came to fruition, maybe they didn't, but definitely this will be a day that we remember. And I really want to see what happens on the open and kind of see how things go when the market opens. But definitely should be an interesting day to learn from, to watch. Definitely one that doesn't come around very often.
Yeah, definitely. I think it's like, as we call it, game day. Definitely last week there was a lot of fast moving, and it was you could catch some really good moves. And I think this week, I don't know, today's been a little bit slow. I think everybody is waiting for New York to open up. So we'll see what happens with that.
Shows again how dependent we are on what is going on the stock markets, or in general on the financial markets in the States. So.
Yeah, definitely. But I think it's not about being dependent on the stock market. I think the stock market is the Sorry. I was going to say something very smart.
Yeah, indeed.
You know what? I need a break. I need to go out. I need to get some fresh air, and I'll be back in a minute. All right, so I can actually function.
That is okay. We will hold up the fort. He's gone. That's what I think with trading. You have to get up. You have to move. If you're stuck in front of the screen all day, it can fry your brain so fast. And then you're taking trades out of fatigue at the end of the session, and they tend to be the worst possible decisions you could make within the trading day as well. Mostly because comes from just sitting in front of the computer.
Yeah, it's really like this, no? I mean, like last week, I was like, my God, I felt like mentally beaten left and right, really, all the time. And the best decision was like on a Friday that I said, like, okay, I'm going to step away now. it happens what will happen, but I need some days off. I was like struggling with a flu as well, and that was the best decision ever, to just ignore the markets on the weekend, of course, crypto markets for 3 days, and regain some energy. This morning feeling much better, much better, and it showed also last week in my trading decisions really that I was not mentally where I was supposed to be.
Yeah. How was it for you last week, Diana?
I was on vacation last week, so I was trading, but I had the opportunity.
That was the best decision ever, man.
Yeah. Well, I was still trading, but just got to enjoy the beach and had a lot of fun. Friday especially was fun to come in and get some trading done and then go off and enjoy the rest of the day. So it was great. It was a great time. I feel refreshed and rejuvenated. I sound a little hoarse today, but it was great.
That's because you were partying so hard, right?
Yeah. Well, there's a lot of pollen here, and my son wanted to go play. Do you all play cornhole? Do you know what cornhole is?
Can't say I've never played cornhole.
You have like the bean bags and you throw it at the little.
Yes.
Yeah.
Yeah.
Do you call it cornhole or something else?
It must be called that. I don't know, but I've played the game. Yeah.
Well, anyway, it was so full of pollen, and then we would throw the bean bag, and it would just go poof, and pollen would go everywhere. So that was probably a bad idea to go do that yesterday, but it was a lot of fun. So I'm looking forward to seeing what happens today. I think if you're trading today and you're not comfortable with what's going on, it's a good day to just kind of watch and soak it all in and kind of watch from the sidelines, or trade super small. If you really want to trade super small. This will be I don't know if it'll be a big day. I assume it probably will be, but it's definitely going to be an important day that we can learn from and take some good takeaways from today.
What are you looking from a day like this specifically, Diana? Like, what would trigger you to say like, I need to be looking at this chart now, at this asset to potentially enter a position?
Mm-hmm. I'm only going to be trading the S&P. I'm looking at gold as well, but at least in my main account, it'll only be the S&P. And for me, it's going to be really important how New York opens and what happens after the open. So paying attention to, right at the New York open, how price responds, maybe taking a little bit of time, depending on what happens. It's hard to say before it happens, but taking a little bit of time to see what is price going to do. Is it going to find a direction, and then trying to jump on the momentum with whatever we have today. I've seen a lot of opinions, especially on Twitter, and they're very polarizing. Nobody seems to be kind of in the middle. Everybody has super strong opinions on Twitter, and that's in large part probably just personality and how you get attention on Twitter, that kind of thing. But for the most part, it seems like it's very divided, and whatever your opinion is, if you're a Twitter poster, it's a strong opinion one way or another. So I'm trying to just see what happens, take my time, watch how the market opens and how it trades right after the open, and see if I can hop in on a move.
It's funny, how Twitter trading reality, I would like to call it, is so far away from actual trading reality, where you, as a real trader, you always try to be humble, or you are taught by the market actually to be humble, and be a little bit flexible with your opinion. Whereas on social media, especially Twitter, you have those black and whites, always like, see, I was right. I'm going to tell you this is going to happen now 100%. And if not, I'm going to delete my tweet. So you cannot see that anymore, and it's always funny for me and kind of sad actually, because as a beginner trader, if you see strong opinions like this, you're kind of going to fall for like, these guys, these people on Twitter there seem to know what they are doing, so I should follow them, I should copy them, I should join the group and stuff like this.
Right.
But then again, nobody does like live trading like we do here, no?
I really like British pound Swiss.
Yeah, go for it, man. But what do you like about that one? You want to
like
go? You want to trade the return to the average, right?
Yeah, I like the fact that it's gone down 1.5% nearly, and then it's consolidating around this area.
Yeah, it's compressing a bit there. No?
Yeah.
Oh, why not? Can have an. Actually, if you put the stop there slightly under, what is that, 109.40 or what is that? You have a good R still on that trade, actually.
5 lots on.
5 lots. I'm Alex. I'm going to throw 500,000 into the market right away.
Oh my god, dudes. Okay.
Well, and that's the thing too about Twitter and everything else is you don't have to. I think there's the impression that people know what's going to happen, and like you said, they end up deleting what they say. But also, you really don't need to know what way the market's going to be going. You need to risk correctly, manage your position, and that in itself is hard to do, but it's not about knowing what's going to happen, or leave that for the Twitter folks. We're better off managing our risk and reacting and responding to what we see. I love this. Someone wrote, what gets us into trouble is not what we don't know, it's what we know for sure that just ain't so. That's really good.
Yeah, that's kind of the mantra that a lot of politicians in the USA could have at the moment as well. No, we don't know what is happening. We have a hunch what is happening, but if it doesn't happen, we are willing to go into the opposite direction.
Mm-hmm. Dirk, when 2020 happened, what was your thought prior to the V reversal?
Yeah, I didn't expect that one, to be honest with you. Absolutely not. I mean, I was always still am to this day in a way like thinking the same applies that we had 20 years ago. We have a lot of liquidity. We have a printing press still running, and that liquidity needs to go somewhere. We are seeing M2 global money supply at record highs. We had the same during COVID. But I didn't expect it would have such an impact. So I was not betting on further falling prices. Actually, the whole event of COVID very much surprised me back then. Maybe because it was something I've never experienced before. The longer you do that, you're really kind of expecting like economic things go wrong. You see like inflation rising or like GDP going into contraction somewhere, into recession, but you don't expect really something such as a global pandemic. Same applies to like 10 years earlier, not 10 years, I think it was like 7 years earlier, for example, to Fukushima. I remember this very vividly. I was a Forex trader, full-time option trader there for a family office back then. And that was like mind-blowing for me, like how volatile currency markets suddenly can get.
Interesting.
So it's those black swan events. And I remember somebody earlier this morning said, like, it seems somehow that these black swan events come closer and closer to each other, which I kind of agree, but I don't think it's like that they come closer and closer to each other per se. I think it's because the world is so connected nowadays that really a black swan event in some area is going to have a ripple effect over all financial markets nowadays.
Yeah, that's interesting. It could also be that it affects us and we're aware of it, so it seems like a big deal. But things, historically, if you look at a chart from, 1950, what would have been a black swan event to somebody trading in the 1950s to us looks like just a little blip in the chart. And so do you think that's not the case?
Because we were still having like more local markets back then. No, it was like happening more in a bubble. Now it's like something happening in China, for example, is something big happening in China is going to affect everybody who has like who's doing trade on a major scale with China. I mean, we saw that with a virus coming out of China with COVID, for example. Something like US tariffs would have had much, much less effect in the 1930s, 40s, or 50s, just because there was not so much worldwide export going on. You didn't have like like talking like as a German now, so many car manufacturers in Germany exporting their cars to the US and vice versa for other products. I actually still remember I was an exchange student in 1994 in Minnesota. And I was staying there for a year. And of course, you didn't have internet, or just the very slight beginnings of the internet. And it was, for me, it was very funny when I returned after a year to Germany. Like the music that was popular in Germany was popular in the US half a year ago. So yet this delayed effects, and which you don't have nowadays anymore. Nowadays, everything happens in real time. And I think that's also why you see the markets reacting more in real time to it and more violently reacting in real time. I said it earlier, I think something like we are seeing with the tariffs right now, like even like 40 or 50 years ago, probably we would have seen the same effect, but panning out over a couple of weeks or even months. So you don't have those -5, -7 days. You slowly see that over a couple of months.
Interesting. I'm from Minnesota. What did you
are? From where?
Northern Minneapolis.
Oh, that is when I was in Eagan, Minnesota, when I was an exchange student. It's not too far away. I loved it.
Not far at all. Did you
Go
enjoy?
Vikings.
Yeah, right. The Vikings fans are crazy, though. Are you? That's what makes it fun, right?
Yeah.
What did you think of Minnesota?
I loved it. I didn't love the winters though.
Yeah,
and
of course,
that's
no
a
one
lot
does.
saying it as a somebody
German,
from Northern
though,
Germany.
Similar, or is it colder?
Not really. It's cooler. It's cooler. You
Okay.
have like, I remember I was standing at the bus stop waiting for the school bus. And it was like -25 degrees, and I could feel the liquid in my nose freezing up whenever I breathed in. That was crazy for me.
Yeah. My kids are always jealous that they think it's so cool to go travel there. And I'm like, oh gosh, it was so hard when you were, an adult too. But did you ever, we used to put our face in our jacket.
Yeah.
People ask about if you've ever licked a pole and got your tongue stuck to a pole.
Luckily, I didn't do that.
I never did, but we would put our jacket up and the little zipper would get stuck to your lip or whatever. And I did that plenty of times.
Yeah, it's crazy cold reading that.
A lot of Germans are in Minnesota too. Like they've lived there for a long time. So I don't know if you came in contact with people who were, second, third generation. Yeah,
I remember my host family back then had like a Swedish background.
Yes,
called the Darburg, and but I know there are a lot of people of German ancestry heritage in Minnesota as well. Yeah.
Cool. I'm glad you had a good experience there.
Yeah, I did. But it didn't make me lose my German accent, sadly.
You didn't acquire a Minnesotan accent in your English?
No, I wish I would have, but back then, that was like how long? Like 30 years ago now. I was sounding the same as I sound nowadays.
Okay, so you already spoke English when you went there.
Yeah, luckily. Yeah.
Well, it's not the best accent to acquire anyway. If you can get a cool British accent, that's probably better.
That's what everybody in the States is dreaming of now.
Right. I wish I sounded as cool and exotic. Either that or New Zealand. That would be my top choice. They have the coolest
That's
accent.
what you want. You want a Scottish accent.
Scottish is pretty cool
but
too.
Australian accent also.
Australian.
Hey, let's go, barbecue mate.
Yeah. I can't even attempt it. I can't get close.
Me neither. But our dear Alex, you have a good British accent.
I have a good Brit. I've been working on it for 28 years, Dirk.
Yeah, that's why.
Yeah. How are you? All right, mate. Can I have some water?
Oi, mate.
That's how they talk. My brother, you can't actually understand him. Here we go, getting a pop up. We're getting a pop up on an Aussie dollar as well. So there's a bit of a nice break retest continuation trade on Aussie dollar as well. USD.
You know what? I'm just not gonna trade today. You know, I feel like
You sound broken. Look at Aussie dollar USD and tell me that isn't a nice break retest on top of the range.
Oh, sorry. I thought I muted to cough and I did the wrong button. So sorry about that.
That's okay. I did the same this morning during
Could
the
be a lot
countdown.
worse.
I
you
went to
did
my
it during
mic
the
and I
intro.
did like check, test.
yeah, that is okay. That is an interesting reaction on AUD/USD. But I'm just not gonna trade it.
What changed your rest didn't refresh you? What changed your thought or your?
Well, I think it's just that it's the
Cocaine.
no. We're professional live trading stream here.
Is it the market or is it something about you? I may have missed it. You may have talked about it earlier.
No, it's just you. It's not it's me. Did I just say you? It says me. It's not you, Deanna. It's me. I'm looking at the screen and I'm not thinking. That's the problem. I'm just staring at the candles and not thinking. And then that's better just not to take a trade.
That's very wise, to be fair.
Yeah. You know when you look at the screen and you're like, it's literally like there's nothingness.
Yeah.
You know.
It's just some red and green blurring into each other. Yeah. Totally understand that.
Yeah. Yeah.
Yeah,
I feel like this is the most action this live stream has ever seen.
Cut down the amount I trade big time. Oh, go on.
Did you continue? I thought you had your mental stop earlier.
Right.
Damn, I did have my mental stop, but that was on one account. That was on one account.
That was like I know you. The
stop on
cutoff
one
session
account,
for you
though.
is like at like 12 p.m. I understand, of course.
Yeah, we mental stops are only depends what day. Rules are there to be broken.
That's
as
true.
I said.
And mental stops go into revenge trading.
They're dangerous, that's for sure.
Yeah.
Okay, I think if I had to take a trade, I would probably go long AUD/USD.
Hmm.
Oh,
I feel like it's gonna do something. Who pulls that up? My God. Here we are trying to
come
stay
on, no, that
professional.
was really a bad joke, really, guys.
I thought it was actually quite good.
We are not doing any drugs here. We're not doing anything here except
I would
being
surely
high on
not be
trading,
this
of course.
tired if it was true.
Yeah, you wouldn't be that tired. That is also true. Yeah.
Exactly. I would be in 200 trades right now on gold.
Ooh, you
Then I
got
would
on.
probably think I was long, and then I would probably be short.
And then
Okay,
you
so
would call
Nas-
Martin Scorsese.
So Nasdaq is actually looking like a long. Now that is a break and retest. And that looks
Starting to
really
perk
good.
up a little bit.
Hey,
Let me
Diana,
get
you
a-
are trading the Nasdaq quite often, no?
The
Look at
Nasdaq
this,
and the
Alex.
It's
Isn't-
literally it's the same same pattern. Yeah, it's the exact same thing. And actually, to be honest, it's nicer because you've got the gap.
right.
Yeah.
So it's like break, retest, close the
Yeah,
gap.
but we'll have a move like this, you know. We'll have a move like this, and then the US market opens and it's gonna move like this, you know.
Yeah,
Oh,
Dirk,
my-
what do you think is, one of the concerns that I have that I've been thinking about this morning is how things are going to open. So what kind of volatility we're going to see actually at the open? I think you were talking about that earlier today, right? Is maybe I have that wrong.
No. I was questioning that all day actually. What is the US going to do on opening? I don't know. I'm kind of feeling like that a lot of the hatching that needed to be done was done on Friday already. So
Right.
the move of anticipation we saw, for example, from Bitcoin on Sunday and on early Monday mornings was maybe a bit over-exaggerated. I bought some NVIDIA earlier on the live stream also at, what was it, like around 85 or 86 US dollars pre-market. So in euro, here in Europe, of course. And I wouldn't be surprised actually to see a tick to the upside on opening.
Yeah, I agree. I'm just worried about the actual moment of the opening, what that's going to look like.
Yeah.
If there's going to be too much volatility, you know, again, the actual moment, what that's going to be. And if it's unwise, I mean, typically I trade after the open typically, but not as a hard rule. I'd love to be long here as we're moving into the gap. Price has tapped right into the bottom of the gap, maybe like a third of the way in. And I would love to, you know, hold through that gap, but I'm just concerned with the open coming in about an hour, what that's going to look like, if it's going to make it through in time, if I could enter a position and close out before the open, but I'm not feeling super confident about holding into the actual opening bell today.
Yeah, I get you. Yeah. Absolutely.
Oh, geez. Now it's going fast. Oh, bang. Wow, boys and girls. In that.
Wait,
Look how
which-
fast
that-
that's going up. Jeez, it's flying.
Okay.
British
Why?
pound, Swiss.
Bitcoin also on a move
Wow.
here.
So who's opened their mouths?
We have someone saying something on Fox News.
Oh, because something about more.
We have
tariff.
White
Oh,
House Secretary. Is it okay? White House Secretary Advisor Hassett something. There are some great deals. Okay, you know what? I'm not even gonna try. I'm just gonna copy paste it. And
Let's just-
We have
the,
somebody here who took the work off our shoulders.
oh, okay, nice. Well, that's exactly what I tried to read.
They're bringing on tariffs. Trump will decide if the trade deals are good enough.
Well, what does that mean? What does that mean?
Well, the market is so fragile.
And he also says that the okay, so that obviously created a okay, so the dollar currency index went down with the S&P 500. Like, what's happening?
I don't know. I give up with this market.
It's I mean you can kind of see like the underlying expectation that the financial market has, and the expectation is, you know, they are going to find some kind of compromise there. It doesn't let the US still keep their face. That is okay for everybody else in the world, so things can continue the way they basically were in the past 25 years. That is the hope of the financial markets, but you know, dreams are dreams, and they do not necessarily become true.
You know, I kind of feel like I give up. It's like trying to
Don't
analyze.
There's always a solution.
I'm just saying, like, we're trying to analyze this situation from a macro perspective. It's like,
Well, and also if you're not a macro trader, it's okay to just be strictly on the charts, right? To just be a technician and, you know, try and keep those. If you are a technical trader, you don't need to start bringing in macro stuff to your trading now because there's a lot going on. You know, this will fade over time, and you can just stick to trading how you trade, you know, the technicals that you trade.
yeah, definitely. I mean,
how important
you know,
are
there is
fundamentals?
Shh. Sorry, Alex.
That's it. So, Diana, how important do you think fundamentals are? Sorry, Jonathan, I'll bring you back on.
Okay, so there is.
Banned.
How important are fundamentals on lower time frame? If you're a day trader, lower time frame, what do you think? Are they important fundamentals, or do you think technicals take it when it comes to day trading?
It depends on you and how you trade. For me, fundamentals mean absolutely nothing. I don't pay attention to fundamentals. I pay attention to when news events happen and that kind of thing, but I don't trade fundamentals. And there are other traders who are way, 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 way more successful than I am. Linda Ratchke comes to mind. She has said, pardon me?
She's a wicked trader. I love her stuff.
Wicked trader. And she has said very recently, she trades only technicals. And she obviously, she knows all kinds of macro events. She can speak very intelligently on all of this stuff, but she has come out and said, I trade only the technicals.
Yeah, the way I see it is I'm not a fundamental trader at all, not a macro trader, but I do really, it interests me, right? And I like creating theories on my swing trading. So in my swing trading, it is quite important to know kind of like what cycle we are in. Are we at for example, are we at the top or the bottom or the middle of like a credit cycle or a business cycle? And the way I look at it, the difference between technical analysis and macro analysis is, when you open up a chart and let's say you're a technical trader, you open up a chart and you don't see anything, you're like, okay, I don't see anything here. Well, we have scenarios like that with macro analysis as well. And that, to me right now, that is a scenario like that. So if you are a fundamental trader or a macro trader, you're looking at the current situation, I think a lot of those would say this is just confusing. There's no clear theme. There's no clear direction. We don't really know what's going to happen. There's too much uncertainty. And in that case, I feel like it's better to take a step back and wait for the whole scenario to kind of play out before you have clear ideas on direction. Because let's face it, I feel like either you're going to take a gamble that you think you're at a cycle low, or you're going to go lower. I mean, this time it's basically a gamble, because who knows, really?
Well, and to be fair, we never know. Even though people say, oh, I know this, I know that, gold is going here, the S&P is going there, we never actually know. No one knows. And if they did, there would be a lot more consistency in what we hear. But we don't know where price is going. And even if somebody says, I'm bullish, right? Okay, well, it might go down before it goes up. It might go down a ton before it goes up. It might go down a little bit before it goes up. And that's just the way trading goes. And so if you are a technical trader, to start introducing macro concepts or understanding why S&P is doing this, or why it should do that in the future, that's two different games that you're playing. And you can do that. That's just not what I personally do. And especially as an intraday trader, macroeconomics fundamentals have very little to do with it, nothing to do with it, except, like I said, the open is really important. That's going to be impactful. These events that happen are important. But at the end of the day, I'm going to be trading technically, not because I think, Trump's going to do whatever, and his plan is going to work great or poorly or what, I have no idea. But I can trade technically and make money that way.
Yeah. I mean, if you're trading intraday, I mean, it doesn't really matter what the macro is, right? I mean, if you're trading level to level on the intraday basis, I mean, it doesn't really matter what the macro is telling you. And I think that's one of the, for me at least, that's one of the most interesting things about being a intraday trader or a scalper, is the fact that you don't really, like, you get in and out of the markets and then you stay out and you don't really care about what's happening, right? And that's the beauty of being, an intraday trader. As a swing trader, I really want to be an intraday trader, because I want to be able to forget about the markets when I'm not trading. But as a swing trader, I kind of have to understand, okay, so Trump is having a speech. I better kind of, make sure that I'm ready and available whenever my alerts goes off, right? Things like that. But being able to get in and out of the market, I think that's that's why so many people are interested in the day trading aspect, because it's I think it's, if you get it right, if you get it to work from a technical point of view, I think it's the easiest it's the easiest way of trading if you can figure out a system to do so, because when you're then out of the markets, you don't really have to care about the markets.
I easy and trading just don't seem to go together for me. So I think trading is always hard. So I wouldn't know.
Yeah, but there's the different types of trading that is more difficult, right? So, I mean, for me, swing trading is easier than day trading. But if I were a better day trader than a swing trader, then I believe being a day trader, I would have the opportunity to completely disconnect from the markets when I exit a position. Now I'm constantly in a position, and I have to care about the macro, because if I'm going to be staying in a position for 2 months, obviously I want to make sure that I know what's happening around the world. You know, if there's a new war that's going to change everything, then I'm better get out of the position. So being able to kind of take a mental break as a day trader, I think it's the best type of trading, I believe, if you're able to get it right.
I think you choose your hard, right? If you're a swing trader, then you worry about your positions maybe on the weekends or something. If you're an intraday trader, there's a lot more intensity and focus and things that happen when you're actually on the chart. And so that's why, it's like you have to pick your poison, basically.
But why do you need to restrict yourself? You can be everything, you can be like me, a long-term investor, and you can still suck at scalping.
I think everybody is good at one of those things, and like they're better at doing a certain thing. Like definitely when it comes to investing, I absolutely suck because I ride all my profits all the way down. When it comes to swing trading, Jonatan is much better trader than when he's day trading, and you can tell me if I'm wrong, Jonatan. You're much better at swing trading than you are day trading on 1 minute time frames, no?
I would say that I'm better, much better. I don't know, but I'm definitely better.
Okay. So I think it's like the only thing is the more options I think you have as well, the more options you have to lose money. So it's like, I don't know. It's a difficult one.
And just like mastering something in the beginning, I think is really helpful. So you don't have to be an investor, swing trader, intraday trader, scalper, everything all at once. But once you have a one that works, I think it's easier to expand your universe into the other styles as well.
Yeah, I think that's very true. Once you understand like the fundamental forces in you kind of get a feeling for one market, how it moves. And that's why I'm such a friend of, concentrate like on 1 or 2 assets first and not try to cover them all. Like many beginner traders like to, I have this idea, I'm going to look at it for 50 different Forex pairs now. Don't do that, this is, for example, what I love about Victor very much. He's like the god of trading when it comes to EU. He always knows what's going on a lower time frame. And I think this is what you, at least when you are striving to become a scalper or day trader, this is what you should copy, understand what is going on the asset that is driving everything else in Forex trading, which is EU in my opinion, or to a certain extent, GU cable.
A lot of people say that certain assets have their own kind of personalities. What do you all think about that?
Well,
do you agree with it, or would you say that's just absolutely crap? No assets have personalities; they just move the same.
I never had such a deep philosophical thought
I
about my trading style.
I'm not saying it has feelings or anything.
Well, I think
they do have like characteristics. Let's say for gold, I always feel like gold, before it makes its move, it likes to come out, take all the lows and wick back up into the range, and then it finds a lot of momentum and then just goes off. Whereas I don't think that doesn't happen as much on GU. Once GU starts to go, not necessarily you want it to come back down and wick everybody before it comes up, because it just shows those kind of things. That's what I'm asking.
I think so. I mean, even looking at the indices, they move very similar. They're similar, but there are different characteristics of the NASDAQ compared to the S&P. The NASDAQ is like the crazy cousin, right? A lot of fun and all over the place. ES is like a little, or the S&P is like a little bit calmer. Very similar. They're kind of doing the same things, but there are nuances to it. And things like, gold, I think gold definitely has its own, personality, I guess you could call it, or characteristics, way of moving. And even like Forex doesn't, it tends to be like more mean reverting than like compared to the indices. Not completely, but, so yeah, I think they have different ways of moving, and that's why people have their favorites.
It's like this instance as well on gold. It's literally just done that exact thing. It can still be long, like it still looks long to me, but
I just went long, mate. Really?
Okay.
This minute on this confluence signal, really.
It looks long, like gold looks long, but before it goes long, it just causes so many people so much pain, because it was this range. For me, it broke out of this range, but it clearly hasn't finished its work, because I was long earlier this morning on gold as well. I still think it's still long.
Guys, I gotta go. I gotta prepare for an interview I got coming up here. Victor will be coming on in about 15 minutes, and
yeah, that's what I'm talking about. Look at that.
I will see you all tomorrow. All right.
Have a good day.
So
Good
Dirk,
to see you.
Look at this.
You've got in a really nice place, because it's taken everyone out and now it's pushing up. Well, I thought
it's perfect. It's the perfect trade right now. Really, this is what I've been looking at. Screw
it's
the trade I did
well.
earlier, But
look how nice that is. See, that's what I'm saying when I say personality. That is typical gold.
What time frame is that? I can't see. Is it?
Sorry, that's on a 30-minute.
30-minute.
Don't look at the 30-minute normally. It caught on a 30-minute though. It really is clean, and it shows what it's just done. Because I would have, I was long here and thinking it would go to the 200 instead, and I would have had my stop underneath that low. So thinking about it would have just taken me out and then go off. And Dirk, what was your reasoning for getting into that position? You mind breaking that one down?
Just because I was angry at myself that I prematurely took that trade earlier. I mean, if you would have listened to me this morning, I said, I'm going to wait for confluence long or confluence short signals from my indicators, which is something we got just now here. But instead, I traded this earlier, so I lost $100 on this one. Not much, but still, it's like, why did I do that? Because I couldn't keep my feet still. Even after 26 years, I still deal with that issue. Instead of waiting for something like this to happen, what we saw just now, and trade the return to the moving average here. So if I'm lucky, I'm actually going to be able to exit this trade. And whether it's a nice one, within just a couple of minutes.
Interesting. I take it, is this the Haishinaki? Is that you're using?
I'm trading Heikin Ashi charts on a 2-minute time frame, simply because they line up better with my set of indicators, proprietary indicators that I use, because my indicators like when the trend is more smoothed. And Heikin Ashi charts, being average charts, tend to do that. On the lower time frame, I don't deal particularly well with all the noise you get there from candlesticks.
Have you ever looked at Renko?
Yeah, I love Renko charts. Absolutely love them. But you have to find, they are always a trade-off, They look good if you show that to somebody, but you don't see the entries really. You can see like a signal down there, but the entry is up there because you don't see the Renko boxes really forming until a certain amount of way has been taken, or a certain amount of price has been there already. So it's a trade-off of finding the right box size, in my opinion. But I'm actually right now, as we speak, these days, experimenting with this.
I really want to get into Renko charts. AUD is absolutely
It's
tearing
insane,
up.
right?
AUD is absolutely tearing
As
up.
you see, like we are moving, like what are we, like 40 minutes away from US opening. Things are getting prepared. I think we are going to have a less bad day than we actually thought.
It was funny because LJ and I, we were talking about long AU from this morning, and I got my ass handed to me, and LJ was patient and actually got into it patiently, I hope anyway. But now it's starting to really, really show some momentum. But it's just hard sticking, you know, I really look at people that can sit down and wait and be patient, and I can't.
That's the thing, you know, and it's, for me, it's a mystery, you know. If I look at myself, like I'm doing all of these long-term trades, I have the patience of making my plans for the next 2, 3, 5 years, really. And then I'm here looking at gold on a daily level, trying to scalp it, which is completely new to me. And I'm like, oh my God, I see something, I need to act on it, you know, instead of really just sitting down, waiting for something like I saw right now, no matter if it's going to turn out to be a good trade or bad trade, you know, but waiting for the stars to align, basically.
Why do you think that is, though? Like in general, not just with yourself, but in general with people, because it's also the same.
I can only speak for myself, of course. I have noticed, like, on the long-term trades, I don't care much about, like, what the charts are doing on an intraday level, you know. I look at them like, oh, this is how the stock market closed today, this is how they opened. I don't care very much what happened in between, except we see like extreme moves like we saw obviously the last couple of days. When I am looking at 2-minute charts for gold, like I'm doing right now, I have a tendency to over interpret like something into current moves. Like I make moves bigger than they really are. It's for me difficult to take a stance back and just look at the general picture. For me, like the last candle is always more important than it is. It's up to the point where I noticed like sometimes it's good for me to just go away from the chart and do something else, even playing something, a computer game or whatever, watching a YouTube video, doing something stupid, so I'm not so much focused on the chart, on the low 2-minute, 1-minute, 5-minute charts that I'm looking at right now.
Yes, you take profit.
And here we go, and this is the take profit, guys. So that was $96.
Such a shame because you got such a nice entry, and I can really see it popping up.
Yeah, it will probably. You know, later I'm going to cry into your ears, you know, that this could have been like $400 or $500.
But you followed your plan, right?
I followed my plan, exactly.
Not
That's
on the entry,
point, Diana, yeah.
Maybe not on the entry, but like overall, that was what you intended to do, or
yeah,
right? Isn't
the
that
first
what you
entry,
said?
not the second entry? I completely followed my
gotcha.
plan. This is a back-tested strategy, not on gold, I have to say, but on cryptocurrencies, which has an insane Sharpe ratio of 3.5 over several years of charts. And this is also why I'm sometimes like beating myself up. Why don't you just trade this same one on gold? It's hard to automate, though.
Sharpe is basically taking the returns away from the drawdown in the accounts.
No, a Sharpe ratio means like that you look at what your profit. No, it's a risk adjusted profit factor, if you want to say like this. Yeah. So you take into account something like where was my max drawdown, and for example, this strategy on Bitcoin, also on the 2-minute chart, has an annualized return of 350% with a drawdown of 7%, which is insane. You know?
Wow.
Yeah. I'm actually automating the strategy right now for Bitcoin also, as we speak. But it's not so easy because it's complex from the indicators, and trading view is notoriously difficult when it comes to computation power of indicator alerts. So sometimes they lag, sometimes they don't send you your indicator alert. So I'm right now looking for more sleek solutions on that, like on C# or even Python or something like this.
Balance-based drawdown from end of day. Please change your terms of balance-based drawdown from end of day. Okay, I think it is balance-based drawdown anyway. It depends what account you're on. I think it does depend what account you are on. Oh man, gold. Just looking how technical it is and just how much it hurts traders. Just look at it. It just makes me. I just look at it. I'm like, that's beautiful. That's like a beautiful thing, you know. It's a shame. All I talk with my partner. All I talk to her about is trading. She can kill me. She just doesn't. It's not even about anything. Just like, babe, you should look at this chart. Oh.
Yeah. I totally get what you mean. Yeah.
If you don't know what you're looking at, it's not very interesting, but it is so fun for us when we watch it all day, and these things are exciting.
Well, I guess, yeah.
But you know, my husband's a trader too, and sometimes we can just like go overboard. Just like, okay, let's talk about something else.
That's
the dream come true. Of a nightmare come true, maybe. Also.
Right.
Wow.
It depends, right? It can be somewhere in between.
How did you, if you don't mind me asking, how did you guys meet? It wasn't through trading, was it?
No, he was. We met in business school. So he was in the military. I was doing my doctorate, and we were in different parts of the country. We met at business school, and then he went back to where he was based. I went back to where I was based, and we dated long distance for a while. And then after we got married was when he introduced me to trading.
Wow.
Yeah, so that's how we both ended up. And I was reluctant.
I should get my partner into trading.
That is so awesome.
It took him a long time. I was not interested. But you know, it kind of came at the right time in life, and I was finally just like, okay, fine, I give. And then I got bit and never looked back.
Okay, you've given me such a good idea. I'm gonna do it.
Yeah, if you get her on board, then you forever have a hobby together.
Oh my gosh.
Isn't that a nice business idea, maybe also? Like for the 5ers? The 5ers love.
That's it, yeah. You got the partner. You got a partner account on the 5ers.
Yeah.
Make your love for trading private.
Yeah, no more Tinder, guys. We're doing speed dating on the 1 minute time
Connect or something. Yeah. We don't trade the same. As somebody asked, do we do the same trades? We don't. We kind of tried that back when we were quite a while ago. We would trade together and make the decisions together. And then we were, kind of to the point where we were like, okay, we're going to trade, but we're not even going to talk about, how it went. Because that's a lot of stress, right? To have somebody always knowing if you had a good day, if you had a bad day, whatever. So now we're kind of our own way. We talk about trading topics, but, don't necessarily share trades. I don't want to know his, outlook for the day. He doesn't want to know mine.
Interesting.
Baby, I want to show you what I can do on the 1 minute time frame.
Oh my gosh, not like that.
That's funny how we could be so passionate about something that is just so like.
I think it's you gotta compensate somehow, no? Don't you? It's like you're looking at like graphs and charts and data all day. So, and if you are like a human being, like myself, who likes to communicate, who likes to talk, who likes to joke also, you have to have your outlet somewhere.
No, definitely. I think if you because sitting in front of the charts all the time, especially for retail traders, it can get really lonely, really boring, and really can actually harm your trading as well. And that's why I think these communities and these trading rooms that we do are so good, because people come in and they have people to talk to. It's important these days.
I think it's super important. That's one of the biggest things that I struggle with as a trader. I love to talk about this stuff. I really learn a lot from other people, and I enjoy connecting over none of my neighbors want to talk trading with me, right? So it's so important to find people that have a similar base, at least to have the same vocabulary, or, be interested in that is so hugely important for me personally. I think for most of us. But we can learn so much from each other as well. So not only does it feel good to have a friend to talk to, but you can really learn a lot from others. I always, I started my career working in a hospital, and I was pretty young and just starting out. And I worked with 3 older gentlemen that were established in the profession, and it was so awesome to have that, and to have somebody that I could see what they were doing and I could observe them. They were all 3 very different personalities. This isn't trading related, but the same concept applies.
Medical profession.
Right.
Okay.
And to emulate, what I saw was working and what I saw wasn't working. And I think we really, really miss out on that as retail traders, because it's really hard, even if you're looking online, to know who is being truthful, who can I emulate, who do I actually want to emulate and trade like, or whatever. What habits do I want to pick up from who? And because there's so much dishonesty in this space, it can be really difficult to know.
100% on that, really. Yeah. Not only in trading, I think it goes for all financial markets, banking stuff, no?
Yeah. Well, in
also
Dirk,
make money online in general. Anything with make money online, it's a bit of a sharky space.
Yeah.
But suddenly I have this picture of Diana on a weekend coming out, mowing the lawn or doing the bushes, the roses, the flowers, the gardening, and then your neighbor approaching you and you asking like, hey, have you seen...
What do you think of GU?
Yeah.
Fair value gap. Did you see that fair value gap on the 15-minute?
Did you see the conference on GU earlier?
No, they don't care. They don't want to know.
Yeah, likewise. Victor.
We have got the nicest quasi on gold. On gold, you've got the most beautiful quasi.
Oh, I thought you were talking about Victor and not gold. No. Just kidding. Sorry, Victor.
You got my attention right there, Alex. How is everyone doing? Deanna, Dirk, Alex, how are you guys doing today?
Very good.
Even better now, of course.
Doing great, Victor. Good to see you.
Same, likewise. And everyone in the chat, let us know how you're doing. At least let me know, because maybe you told these guys already how your day is going. The street, the market is, how would you describe this? I mean, it's someone pulling, what I see is someone pulling their hair out. They are running for cover. It's right? So now is the time to keep calm and trust your risk management. But let us know in the chat how your day has been going, because this is a very particular set of days, to say the least. Dirk, Alex, you were saying something about a quasi?
Yes, my friend.
Alex was here.
Well, I've been looking at this all bloody morning, honestly, and excuse my language, but it's been really annoying because only now it's actually starting to show something. It's still looking at this type of price action. So it's hit on the 50, so that's one confluence. We've had a nice impulsive candle on the lower time frames. This is a quasi, and it has found acceptance above this range. And now it's taken a load of lows before it started pushing up. And if we go onto a higher time frame, we're on a higher time frame level as well. So there, the way that I look at this is that last week we closed above the 21, and I'm thinking that this also closes above the 21 EMA, and it just turns out to be a nice kind of pinning top or spinning top. I can't remember what they call them, those little candles like that, but I think we're going to see a nice trade back up to where it's at now. So
basically what you said is on the 50-minute you see a quasi, which also looks like a quasi on the, I think you said the
on the 5-minute it would look like a quasi. So here you'd have a quasi like this.
Okay, nice. Yeah, sure.
Oh, sorry to interrupt. I'm going to pop off. It was great to see you all, and I will look forward to seeing you tomorrow. Good luck in the markets today, everybody. Be safe. Be careful. We'll see you tomorrow.
See you later.
Thank you.
Okay, bye.
Thank you, Deanna. Take care.
Just the two of us. Ain't gonna make it if we try. Just the two of us.
That's a good one. That's a very catchy song.
Yep.
So, I noticed that Dirk has left the building as well.
Dirk has left the building. He's probably gonna come back on. I'm not sure. He did just go long on gold. Or no, I think he took profits. I'm not sure.
All right, perfect. So, so what have you guys been talking about in terms of charts and pairs so far? I mean, obviously, it's about the volatility. I mean, Friday's volatility was out of this world. I can't say I've been decades trading.
I haven't
but
traded
I've been
like that.
I've been watching the market for many years. I mean, even before I started full-time trading, I was already watching the market for about almost 10 years, right? Trading on and off before I went full-time. And it's been a couple of years already since I'm already full-time, about 7 years. And I've never seen a market like this. Well, there are a few exceptions. I've seen weird things, but across the board, this kind of volatility, it's one of a kind. I mean, this goes into the books, into the records as one of those big rare occasion where you have, ATRs being blown out of the water, pairs going 400%, sometimes 500% their normal ATR ranges or the daily ranges. It was insane. It still is, basically. We're not over. It's not over yet. But it is. I'm sure it's been. Friday killed many traders. Fabian says, yes, I'm pretty sure it did, because it was so unlikely to happen. Although you could have seen it coming. I mean, it didn't come completely unexpected. We knew that this would be impactful, and we already knew it's not something that happened one day out of a sudden. But still, the moves, right, Dirk? The moves were, I mean, liquidating accounts, and we're not talking about retailers only, but institutionals as well. I mean, big. I'm sure these players as well. They must have been running for cover, because these moves don't happen very often. If you understand, if we pull the moves the market does every day or every period you see, and you plot it out on the bell curve in terms of frequency, this is one of those incidents which is far on one side of probabilities. It doesn't happen very often, but this is what they called, I wouldn't call it black swan, but it's in that direction, something that is very unlikely to happen, but when it happens, it has a major impact. And these are the crucial moments for your survival as a trader, how you handle these moments, because they will happen from time to time, even if it's once in a decade. I mean, you can't afford as a trader to be wiped out every 10 years. It doesn't make sense. You build up all your your portfolio just to be wiped out every 10 years. So you have to have a plan to deal with these moments as well, like something like a circuit breaker, like they have in the equities world, where you have a volatility breaker interruption, where if it goes above, I think it's 7%, something like that, the underlying asset just halts for so many hours. Something like that needs to be implemented on your trading account as well, like a hard stop, equity hard stop, no matter what everything else is doing. But if you hit that level, it's gonna pull the plug. I think it's not fun, to be activated, but it's so important for your survival as a trader.
I think that's like a super important point, really, Victor. It's like all about survival. It's like you can trade 9 years in a row profitable, and if one event like this destroys your account, you still have done something wrong. It's all about risk management. I remember last week when we were live streaming, Alex texted me like, "Hey Dirk, what's up with you? You look like devastated." And I was. Why? Because I ended up losing like 0.3%. And for me, that was like, on my whole portfolio, for me, that was like, oh my God, it's like, where's all my money going left and right, But trading is a marathon, all those stories you see out there on social media about, I earned here 100K and there 500K. I became a millionaire or 10-fold millionaire from investing just $500. I'm not saying they cannot happen, but it's not about trading strategy. It's not about risk management. It's just pure luck then. And if you want pure luck, you might as well play the lottery. Here in Europe, sometimes we have a Euro jackpot of, what was it last time I played? $100 million. So that is one of the rare occasions where I actually play lotto, because the risk reward is very good, man. But it has nothing to do with training, so get away from that. It's a marathon. It's not a sprint. And the difference from when I started trading to nowadays, it is a huge difference, not in trading itself, but you have so many tools nowadays where you can become very much more successful than the time I needed to become successful, because you have companies like The5ers, where you, even on a small account, with risking just $50, $100, or $250, you can try yourself out. And if you show like, I'm making a profit with a decent risk management, they are going to provide you with money. That was unthinkable about when I got started in the business. You needed to come from a rich family, or you needed to really, really be one of those guys trading their way up, which was very rare.
Honestly, we are so spoiled to have the conditions and everything that we have today. Like the spreads, commissions, technology, funding. Like if you would just take it back, not even 20 years, 5-6 years ago, from there to here, we've gone absolutely crazy to where we're at. And I think if you want to be a trader, this is literally the best ever time to be one.
2010, when I was did my first steps as a Forex trader for a family office, for the world's largest private client, there was in Forex tradings and Forex options trading, we had a portfolio of $4.5 billion. And I was the new guy then. So I picked up the phone because I needed to do a trade in euro dollar, $10 million, 10 million euros, sorry. So I called one of our partner investment banks, and just because they didn't know me, they gave me a spread of 20 pips. Just because they didn't know me. It's unthinkable nowadays. And it just shows how much the market has progressed, It's like,
but you took
chances
that,
for everybody.
You feel like, but you took that because that was you were.
No, I didn't. I told them, I'm calling on behalf of this and that client. This is like my registration number. So of course the spread became lower, but even then the spread for that kind of order was still 5 or 6 pips. It's nothing like what you see nowadays. The market has changed so much. It's like compressing so much when it comes to margins of the players involved. Back then, the investment bank could basically take whatever they want. They would pretend to be like, was super nice, good traders on their trading floors, but in reality, they just ripped off their clients because they told them, I have a special deal for you. And because the client didn't have the access to the information, what the current real-time exchange rate was on whatever currency pair, they would take like on a 10 million orders, like 10, 20, 30, 40, 50 pips.
Wow.
Which if you do that like 50 days, 50 times per day, it's a lot of money.
Just a little bit.
And it's
just a little bit more than what we're trading right now.
Yeah, just a little bit, tiny little bit.
Teeny bit.
But it is indeed some golden times, golden years for any retail traders with these market conditions. I'm totally with you, Dirk, and of course, Alex, you as well. You can just go from having no money to actually, because you can find these prop firm accounts for very little and sometimes even for free. And you can actually build up a wealth with just out of almost nothing with only your skills. But I was gonna say only your hands, but it's not your hands, it's your mind, but just your skill. And that is, we don't realize how special that is. You can build a fortune out of nothing, like starting a business with no capital. That's basically what it is. You always you need capital, but you don't bring that to the table. So I think that's amazing. I think that's the one things. I think coming it back to today, that's the importance of having prop firm accounts in your portfolio as well, right? Not letting go. I know eventually you want to have your own capital. Makes sense. That is the ultimate goal, right? Not depending on any third party for your capital. But then again, you want to have prop firm accounts in your portfolio as a trader as well, because what happens if you lose? It's not your capital. Of course, you're going to lose hours because you build profits and things like that, and perhaps you bought the account, etc. But you're not going to, lose the capital. Like if you lost a 100K account, it's not, you didn't lose 10K. That's a huge advantage. You can play in the market with a bigger size, bigger exposure, with less risk. I mean, who doesn't want to do that? Obviously it's a way to go to do, add to your portfolio, even when you have enough capital, prop firm accounts as well, because they will basically, you're leveraging, you're going back to that Sharpe ratio. You're increasing your Sharpe ratio because you're getting more return for less risk, right? That ratio is
no risk. For no risk. You take a payout.
If you did a payout, then you have no risk left. Exactly.
Imagine you would be presenting like your trading strategy to the lion's den. The type of questions they would ask you. You don't have to do that here. You just buy an account and then you prove yourself. And if you're good, you get funded. It's as easy as this. It sounds like so easy, of course, but it's like it cannot be more transparent than this, I should maybe say.
Yeah. I think it's still, trading is not easy by any stretch of the imagination, especially if you want, getting funded is still attainable, even if you don't have everything working perfectly fine. But being long-term, having longevity, it takes a lot of effort. Of course, we don't want to downplay the big amount of dedication and time and everything else it requires. But everything else, separate from the skills that you need, everything else is so conducive, is so, good conditions, market condition, everything around. I think it's amazing. I wish this would have happened like 10 years earlier.
Oh man, likewise. Amen to that, really.
I think I've trailed trailed.
Did you get in?
I've been in for a while now, but I think I trailed a little bit too early. Now I look back on the 15-minute.
What are you on there anyway?
It was AUD USD.
The one we were talking about earlier.
Yeah. So it was pound CHF and then AUD USD, but I'm out.
It's we're getting nice pullback now here in gold as well, I think.
Let's have a look. Yeah, same thing.
It's pulling back. I think my close was not the worst, really. Like that small.
No, in all fairness, close. This is the middle of the range. It's actually, to be honest, if you look in hindsight as well.
And it's like I would like it to move now. I mean, we are like 10 minutes away from US opening.
Yeah.
If like volatility doesn't go too crazy, I would like to move it back to 3014, get a nice confluence signal, and I would like to do the same again then.
Why that level?
No, it's because of this here. This is where my lower area of price action is at the moment, or lower area of where or my indicators which are looking for price action. I maybe should put it like this without giving away too much. So this is like the area of importance on the lower side I'm looking at the moment. Doesn't mean like when we go down there I immediately go long. I still would wait for something like we saw earlier when I took this long trade and I exited on the 200 EMA, the confluence long one. On the contrary, if you go up here, earliest at around 3046, where I would need to see, because 3050 obviously is important price area for Bitcoin, I almost said, like for gold, of course, right now. But I think we are going to become a bit smarter in around 10 minutes from now when the US market's open. Are you looking at something at the moment, Victor?
I am. Yes, I am. I was looking at euro dollar and pound dollar, but I'll show my charts. But even if I'm already showing it, right? Yes.
I had the. I took my freedom to display them.
Yes. No problem. Thank you for that. Actually, but the whole area. I mean, there's so many things happening that has been happening last couple of days. And it's mind-boggling. And to me, everyone is different. Like Alex, this is his time, right? According to him, now is the moment. He needs to, he's been training and practicing for this moment to capture, those big profits, those big wins. And that's fine. He knows his strength, and that's obviously what you need to be doing if that's the case. But in my case, when the tension goes up, I want to stay in control. And to me, that means, actually slowing down a little bit. And I think my idea is, at least for me, that's how I function, how I operate. It's okay to not participate. It's far better not to participate. And keeping it on the safe side, even if you're letting profits run, or not run, but go and not seize the opportunities. To me, I think I feel okay with that. It makes me feel good because I'm making a conscious decision, not running after whatever excitement there is. And there is a lot of things happening, and then so when this happens, I actually try to slow down and not do anything extra, because to me, this is very, when the market does things, when moves that it doesn't do usually, I start to think and ponder what else unexpected, unlikely is going to happen that my data, my experience is not equipped to deal with. Because of course, we can only act upon, our backtested data, our experience and things like that. But does that cover really everything? Of course not. Right? We're only limited the time we've been in the market. Even if you have 5, 10, 15, 20 years, you haven't seen it all. And I think, right, you haven't seen it all. So I think it's okay to let this go, or just play it smaller size, smaller risk, be more selective. I don't know, whatever, if it floats your boat in how you exactly you implement this. But I think it's a good thing. And actually, I would say I started saying something like that, like talking about risk management and how, being ready for events like this. Very unlikely, right? On the outskirts of the bell curve, unlikely, but can be very like a fat tail that can be very impactful on the bottom line longevity. The same thought, I think, is good if you think about the amount of accounts that are being liquidated in the retail space because of these moves are unlikely, and perhaps they were expected but not as big as they're happening. Imagine all these traders being pushed, their buttons being pushed, these losses mounting up, and them being triggered into things, into practices, right? The things they shouldn't be doing. It's such a wise thing to foresee that a little bit as much as possible and say, I'm not going to participate. I'm not going to put myself in harm's way. Why do I want to be, let's say it's pouring outside, and yes, you can run when the rain is pouring, but perhaps you can say, you know what? I'm not going to run today. I'm gonna keep myself under the where it's dry, and I'm just gonna wait. Nothing's gonna happen. There's gonna be many more days, the rest of the year, and so many years to come. It's okay if I don't run today, and just having that, you don't have to face risk and look it up and all the time. It's okay. It's actually a very good thing to just avoid it, be a little bit risk averse in that sense. Although as traders, you need to take risks, right? We get our profits from the risk we take. If there's no risk, there's no profit. That's the simplicity of everything. But yeah, I like to think, and I think it's a good thing to have that as a habit, right? When things get hot, step away, do things more slowly, perhaps have one trade a day if that's a thing for you, or whatever it is, but something that keeps you in the game. That's the deal. Keep you in the game, not being whacked out by market swings like these. I mean, with these moves, anyone can be blown out of the water.
But that's the thing, no? Where like there's risk, and then there's risk, And if I think that's like a very smart strategy that is totally overlooked, especially by everybody who's starting to trade, to just stay sidelines for a couple of days. If you see like crazy volatility and you're like, oh, what is happening there? How could I should capture or I should capitalize on that, but I don't know how. Well, then stay at the sidelines. That's totally okay. This is going to save you a lot of trouble because, like Victor just said, you don't, if you get margin called, if you get your account destroyed in a period like this, it's going to happen over and over again because it's just a matter of time. And it doesn't matter how well you perform in between those black swan events. If a black swan event like this destroys you, there is something inherently wrong with your risk management. And from the calls I made this morning to my friends who are still working at trading desks at investment banks, I can tell this is not a problem, that just we as retail traders have. This is an inherent problem that also hedge funds and institutional traders have, especially the ones that are used to kind of upwards moving markets, especially in stocks, that are used to, okay, sometimes, it goes down, but usually it goes up by quite a margin. It doesn't really matter when I invest in Apple or in Tesla or in Nvidia. And they are getting caught on the wrong foot right now. And they are experiencing what it means to have a margin call and to be in a position where you need to come up with capital. Otherwise, your trade is going to be closed. Otherwise, you're out of the game. And we're talking about hundreds of millions of dollars here for some companies, and not like us, maybe 10 or 50 or 100 or 500 or $1 million, whatever we are trading with here. And it's for me, it's really insane how much that also happens on a so-called institutional levels, where you kind of would think you have people like being more aware of risk management, but they are really not. They are really not. It's mind-blowing, really, to me.
It is mind-boggling. I mean, they have the budget to, I'm sure they do, like these players, they have the budget to, and not only the budget, they actually have, quants on their team, PhD people, teams, to tell them, what are their risks, and build those models and robustness tests and stress test them all around. And even they, at moments like these, even they get caught up in the fire.
Yeah,
and if that happens, then go ahead.
Because a lot of them, they don't have like a global stop loss, saying like, okay, if really everything goes down the drain for whatever reason, it's like it's a market like we saw last week on crypto on the weekend. Everything is going wild. Where do we pull the plug? For example, if we have a global stop loss of 5%, for example, like if everything is intraday down by 5%, we pull the plug. And then we sit down and we wait it out, and we kind of reevaluate how do we want to get back into the markets. I don't think that is happening actually for a lot of so-called professional hedge funds nowadays.
Yes, and it's so simple, right? I think if it is something that even, well, let's put it this way: if even they who are considered institutional, they have the wherewithal, they have the knowledge, they have the ability to do anything they want in terms of implementing risk management, they have the human resources to do it as good as anyone can do it. And even if they are pushed into the corners at moments like these, doesn't that tell us that you and I, as retail traders, we need to be extra careful? Because I mean, they have access to so much more than we do, and even they get into of course it's greed.
Yeah,
it's greed, right? That's the word, because it's been going so well, and they can rake in millions if they just keep these risk high. And let's forget about that black swan event they would have thought, until that happens, and of course they're running for cover.
Yeah, they fall for the same emotional traps or psychological traps like we do, no? Like being right a number of times over a period of time, you kind of think of yourself like you've cracked the market code, you are the god of trading. You cannot be wrong anymore. Exactly.
That is we can translate that into us as well, right? To that, we're talking about institutional traders going sideways or south, you would say. But that and on the individual levels, that's exactly what we are at risk all the time, right? If we do well, it will creep in. We will have that feeling like nothing can touch me. I just made 10 times what I usually did in my previous job, so to speak. I'm done. I have the key to the secrets of the markets, until of course the luck has changed.
Yeah, I'm the god of trading. Yeah.
Exactly. It's so human, and it's so normal, and that's the risk, right? Complacency, right? Not being on the edge.
Yeah.
Not considering that you're not a student of the market anymore. No, you don't have anything to learn anymore. You just do your thing, and the market will pay you. Well, that's not going to happen forever.
We are seeing the US markets opening right now, I think. And we are seeing the S&P 500 below 4,900 right now. So it's a bit more of a bad opening than, honestly speaking, I anticipated. Gold also going down again. So I think the interesting phase of a market is going to start right now, honestly speaking.
Actually, for gold, you guys were talking about that quasi. Let's do a top-down analysis. What is gold? I mean, a lot of traders are looking. Those thrill seekers among us are looking to trade gold in a moment like this. So let's look at gold. We have the same area where your proprietary indicators are indicating that it's a good area to buy.
Yeah.
We're currently in there, and I have my own reasons why that should be. But let's do the top-down analysis. We'll do very quickly, just to start on a monthly to get things.
Just to say, I for my indicators, they need to see the price action over again. Yeah.
Okay. Perfect. Okay. So it's not a.
I think I was wrong on gold.
What was wrong on gold?
I think I was wrong on the idea on gold. It is pulling down, huh?
Yeah, it's pulling down right now.
It is really nice to take profit with you, Dirk. Fair play, mate.
But Victor wanted to tell us now what we should do on gold.
let's look at.
No, I was so passive aggressive. Sorry, man. No. You wanted to analyze gold for us.
Yes. Well, actually, very quickly, long-term gold is still on the very high time frame. It hasn't really broken anything. Let's not forget about that, right? Things are looking not so great on the lower time frame, or at least we have a possible reversal, perhaps. On that will come later, but on the higher time frame, this still looks solid. I mean, if you have it in your portfolio. The weekly hasn't created any bearish order block. And the last one, the order block we have is way below us. So things are looking still very structurally bullish. If we go to the daily time frame, we have the first, let's see if this is the open 1401, the close. Actually, it isn't. I'm not sure why this order block is there. It's probably an H4 order block. That is what it was, I think, but it doesn't matter. We didn't create, even with all this move down here, we didn't create a bearish structure where that would cement or give us more reasons to think that things are really turning around, and in gold, even on a bigger time frame. That hasn't happened yet. We are, however, at the last bullish structure we had. We did have one here, but that was at the top. Breaking that doesn't really change a lot when you zoom out, right? This is the more pivotal, the more significant structure that we were looking at. And we already today, on Friday, we touched it very nicely. Look at that wick, right? Right there, we bounced about how much? That was about $39 from that low, which was a very good kudos to whoever caught that, because that was exactly in the daily order block. We're there today. That's the second day we're going through it, and we have with the looks of this wick tells me that this order block is of no significance anymore on the higher time frame. On the daily time frame, it doesn't pose anything. I think the first reaction, if you were a day trader, was on that wick, on that Friday's low. But today, this wick already tells us a lot about the weakness, not the strength, the weakness of this daily structure. So with that in hand, or in the back of our head, let's look on the lower time frames. What do we see, right? We have a price action currently in 21 minutes. Look at the timer to the right. That's the countdown on the candle. This is the H4. In 21 minutes, we will get in outside bar if it doesn't move any higher than this, right? Meaning we're at the daily demand zone, and the 4-hour is spitting outside, bearish outside bar, meaning it has all the indication that it's going to likely break that daily, meaning end up lower. that we don't know that yet, right? It's not our job to predict, but that's what it's showing us. So we'll have to wait for this outside bar to be created, to be printed, and perhaps retest it and successfully retest it, and then have that follow through. If all those things happen during the rest of this day, then the daily is going to be broken. There's no other way. You can mix those two things. So other than that, let's see. We did have a structure above us, a quasi, a very nice one. The left shoulder, the head, that was the neckline. We broke it and we went higher, but we didn't have an H4. So that's an issue with that reversal pattern or that quasi. Other than that, we have a big order block that has been created quite wide for a possible reversal pattern. We don't have a daily reason yet. So if you take this short from this area, you gotta make the decision, the TP, based on the highest time frame, which is the H4, meaning you would be, in case we do get a reversal of some kind, I would be targeting perhaps something in this range and perhaps something a little bit lower, thinking about what's left, what's to the left. But we don't have anything else. This is an entry order block on the H4. On the top, we didn't get. And let me move this the quasi, the retracement line. So it is above the 50% retracement, and we don't have any other structure. So this is something. It doesn't seem like momentum. Currently, order flow doesn't seem like it's going to reverse. But if it does reverse either today, tomorrow, or any of the coming days, and gets to this area, that would be the place I would be looking to short it into lower places. Doesn't mean it's going to break anything on the higher time frame, because on the daily, there's nothing happening yet. It isn't creating very structure. It is healthily retracing, to lower level. That's just fine. On the higher time frame, nothing is happening yet. So I wouldn't be, actually, that's not completely true. We did break a neckline on the daily, but we don't have a daily order block here, right? So to me, it's very slimly so. Yet we did break a little structure on the daily time frame, but that's not too convincing yet, right? So I would be waiting for more indications on the daily to really think that the bull run in gold has topped or has stopped. I wouldn't assume that yet. So long term, I would stay still long gold, but on the lower time frame, we have an H4 order block quasi that has been activated, and we just saw the daily quasi has been also activated, although we don't have an entry order block, right? We don't have an area on the daily time frame to enter, right? That's a sign to me that reversal is not so strong. If we would have a structure that would make the reversal have a lot more weight in terms of probability, right? So you see that also when you have quasis forming and you don't have any structures, they're not very likely to hold, right? When price comes back, it doesn't have those structures to stop it and just continues and breaks the reversal pattern, meaning those are not the ones that you want to be trading. Those are not the ones with the highest probabilities. So we do have a reversal on the H4 and a daily reversal, which has no entry order block. But let's go to the lower time frames to see what else do we see. So we have this possible quasi or outside bar forming in the less than 20 minutes, as I said. That's something we could be using for a push to the downside, right? It's a reversal. It hasn't happened yet, so don't jump the gun yet. But if price comes back to this level, if and when it comes back within a couple of bars on the H4, then I would think that's a great area to be shorting. If we go lower, we can see that reversal pattern as well. On the fresh order block, I mean, the H1 for you, Alex, you were looking for that long on gold. There is a structure, right? There is a quasi. That's the neckline. It's on the H1, which has, I start trading it from the H4.
That idea is definitely now been broken.
Okay, well,
I just went
would
long,
be interesting.
by the way.
Pardon?
I would exactly.
I went long just now.
Oh,
Yeah, I would be looking
you're
for.
dangerous. Dirk's dangerous. Let me see. I want to see this. We're pulling up your chart, Dirk.
Yeah, go for it. Yeah.
Sorry, Victor. I just want to see
No,
the.
go ahead,
Sorry,
go ahead.
I also. No, I
No
went long
problem.
on this confluence signal you are seeing here, and it might be that we are going further down. You know, it's like I'm willing to add on this. I'm playing this on a very low risk, so I'm taking 1.0 lots here actually on this one, and because I might be willing, I think we're going to see something like where I'm going to see a number of confluence long signals here until we finally get a pullback. We are even, a good amount away here from the yellow line, which is the 21 EMA, from the red line, the 50 EMA, not to mention the 200 EMA here. So I think this is a good pullback trade, really.
You're getting long right in the golden zone as well. So if it was any place, in all fairness, that it would find support, it would probably be there. So yeah, fair play. Where would be your stop on that though, Dirk?
My stop is like $50 away. So I'm just trading here with a 0.1, because I'm committed to add to this position. I'm prepared that it might go lower, go like down to 3,000, maybe even to the lower 2,990s, 2,980. It's a bit like what we saw actually. Remember last week when I came online also, I said I went online. I went long at 29. What was it, like 68 or 88? I don't remember really. And it's a bit volatility adjustment on a trade without risking too much. So I'm not going over 1% on this trade overall, no matter what, how many trades I might add to this long position.
Fair enough.
So coming back to the area, I think it's a nice area to go long, Dirk. I was just gonna say that we have on the H1. Let's see. We have on the H1. We do have a quasi.
Sorry, I'll be back in a minute. So sorry.
No problem, Dirk. We do have that quasi, meaning the price is showing an attempt of a reversal. Now on the higher time frames, the daily, the H4, that's not the case. What the price is telling us. Price is telling us that it's actually, if anything, it's piling in to go short. But you can still have both of these situations be true at the same time, meaning it might have a little pop before it continues with the higher time frame direction, which it is showing right now, right? So if I were to trade this, I would be looking for some reason to go long in that area. Dirk already went long, but I would wait a little bit lower. Of course, we trade differently. Something perhaps in the outskirts or the extremes of the move, the initiator of that impulsive move, and get something on the lower time frame, something like this. When we see perhaps either a reversal in the lower time frame, or perhaps even a liquidity grab, because we can all see that there's going to be a lot of stops here, right? Something like this, it takes it out and then comes back and then move the other way. That would be a very nice trade as well. I would be trying to get in on something similar to a right shoulder on the lower time frames, that is on the 5 minutes and so on, and having your stop. In this case, I would have my stops, of course, below that that liquidity grab that we would then see if that's were to be the case. But I think it's a nice long, but you got to remember that the bigger context, the H4, the daily, is not on a long right now. It's not showing a long, so you should not be too ambitious with a trade like this. I would just take it to the next area, perhaps that daily order block that is probably going to be taken out. But that's the area, right? That's the the support area or the demand area we've been seeing in the past. We see all these moves on the lower time frame, then it breaks it, it comes back, but it still reacts to the same daily order block until it breaks it. Right now, it breaks it. Now it becomes a supply area, right? So it will make a lot of sense not to target something above it, but just target in front of it if you get in, right? Knowing the context, and this comes with experience and with either with experience only or with experience and data, knowing when to target the top of the quasi, right? It's not always you have to be targeting the top. Moments like this, when you don't have the higher time frame backing you up, you don't want to be too ambitious. Just take it to the next level, take it to the next, trouble area. And this is a trouble area I see right here. It's a daily structure. It has been broken, at least on the lower time frames, but not on the daily. But price has gone below it, but it's likely to have a similar reaction when we come back, even if price eventually breaks it, right? You don't want to be in this trade when price comes back, and you don't want to be in this part of the move. Mentally, psychologically, it's not a very comfortable position to be in. You don't want to be in harm's way where you would be tempted or maybe even pushed around to close that position because it didn't reach your target and you're targeting something much higher. It would be much better just to take this, unless on the H4 we don't get the outside bar in 9 minutes, and or we see other indications in price action that price is likely to go much higher. But I like this trade. As I said, don't be too ambitious about it if you do take it. What is your target, Dirk?
My target at the moment would be 3,026.
You said 50 or about something
That's
like
the 200 EMA. So what I would do is because we also, I have to admit here on this one that we saw quite a good momentum move here to the come on here. Where's my drawing tool here? To the downside. So this one here, So what I would do in this case is I would, if we touch the 21 moving average here, which is currently sitting at 3,015, I would probably adjust my stop loss to break even plus my commission, so I get out of a trade for free, and then see if it really pulls back all the way to the blue line here, currently sitting at 3,027. And then see, this 3,027 being my take profit, adjusting my stop loss to break even plus the commission, so plus $8 or whatever it is, at 3,015 currently.
Perfect.
But it could be on this trade that we take the grand tour, that we see price further pulling back again. This is why I only traded a very small amount here, because I'm prepared in this type of volatility that I eventually need to add to the position. I don't like to be in this situation where I need to be completely right or wrong on every trade entry. I like to scale my entries. It's a different type of story, when you have a market that is ranging, where you don't see up 5 and down 5 or 10% volatility. I think you need at least for me, I always need to adjust kind of my positioning to that.
I think it's a very wise thing to do. Yeah, leave that room margin for errors, right? We have an idea it's going to go. This is a great area for it to go up, but there's also many others areas that are also a great area for it to bounce from. But what if it goes to those areas? You should have a plan, and your plan is a good one. I like it. You adjust, you average into the position, not because you can't accept the loss, but because that the market just ranges, and you're ready to accommodate those ranges within your plan, and you're actually making use of it.
Yeah, I hope so. At least, you know, I mean, this doesn't take into account everything you've been talking about earlier, of course, and it's a different approach again, you know, to trading, to risk management. I probably should, you know, in compass into this, like everything you've taught me about order blocks, about Quasimodos, and so on and so forth.
Sorry,
go ahead.
No, I'm just saying I'm not quite sure why anybody is trying to continue to sell GU down at these levels. Like, we've had the whole day, the whole of London to sell down GU. Like, why are we looking to sell it now? It's like a bit late. You would probably want to go long. Why would you sell it now? I'm not putting you out of nowhere, Jake. I'm just saying it's just something that we always do. Is like we had all of the options to sell all day. Like, why have we only decided we're going to sell right now, where it's at like a big time? It's a level, like a really strong level as well. If you have a look at the daily, you know, you're at a 50 fib. You've got all of these here as well. And I don't want to put you out your trade or anything like that. I'm just saying we had all of that to trade all day today. So it's just like, why wouldn't we be long off this level? And AUD is literally like that as well. It's just like a mirror of that happening. So not sure, mate, but obviously anyway.
Well, the momentum is to the downside. The only thing is, as you said, that today it seems like it already made its move. That's the thing. Like in every day, that you gotta take it with a grain of salt, of course, because who knows how big today could still be.
Nobody knew last week things were going to go 5% one side.
Yeah.
No one knew that. Like, and everybody that was trying to long AUD last week got absolutely wrecked. So again, yeah, all things can happen, but I don't know if we've got the same volatility as last. I don't know. Maybe I'm wrong, but
yeah. Well, to put things into perspective, the ATR on pound dollar is currently at around 100, and actually we can look it up. We can look it up here and see what it is. 144, right? That's the ATR. And if we measure from the range of today, right, from the top of today, we are currently at 148, right? 100% is still leaves a room, right, which is average, but I think that average doesn't cover today's or these days volatility quite completely. So it's perfectly fine for GU to go a little bit lower or maybe even more than that, but we are already getting into extension or extended territory, right, where a pop is likely, and you don't want to be not the best position in terms of risk reward, because where are you going to put your stop? I mean, maybe you're swing trading.
You're talking about a short.
Yeah, that's short. I mean, the guy who the user who is trying to short it, where do you put your stop? You know, you got to put it way higher. And what can you target if the majority of the move has already happened? It still can be a trade, but you got to know what you're doing. Like keeping it short, things like that. But they're looking for a
sorry to interrupt here very quickly. I just it's because we've hit this 21 EMA right now, so I want to adjust my stop really to break even. I just want to make sure here, that I don't get caught, because we had a quite momentous move here to the downside. So we could also see something like this, bouncing off here or here, and then going further to the downside. And I am in the good position right now that I can take a risk-free move. And I'm going to show you this also. Oh my God.
AUD pushing up. I had a problem with trailed it right underneath that low, got taken out, added back in with half of the risk, just so I don't give anything back. And that's what we're looking at now, AUD long.
So it's that one here. Wait.
Ooh, I like that. I like that Aussie dollar. Ooh.
How am I putting Victor? There you go.
Just to show stop loss to break even right now. Waiting it for to the pullback to the 200 EMA. The blue line on the top there. Should we hit this, I'm going to exit the trade. Right now I have it at break even plus my commission. So whatever happens, I'm going to get out of this trade. Not feeling butthurt, so to say, financially also. And yeah, back to you, Victor.
Perfect. Yes, that Aussie dollar you're talking about. I like that. Alex, you said about you're long already, or you're considering?
Yeah. So I've been, I longed it. I longed it originally from. I longed it earlier into the session, back in this morning, which got knocked out for. But I did long it at 603.46 for the break retest continuation on the 15-minute.
Okay.
But then I trailed the stop underneath the low. It got taken out. Of course it did, because I don't I trail my stop too close. If you go on the 15-minute, it'll be a little bit clearer for you. There you go. And now I'm back in at 60.50.
60.50, nice. Yeah, I like it a lot because even though the H4 isn't telling us the whole thing, at least not currently. I like the H4 did show us earlier, right? So on Friday, it's the beginning. It's the Asian session.
Pound getting aggressive as well. Pound's getting proper aggressive. Yeah, pound US dollar. I'm not in, but it's whoever's got short there. God help you, son of Jim. You're gonna get caught, man. It's big time on that.
That's GU. Yes, it is.
Actually, yeah, I was on a 1 minute time frame though, guys. So beg your pardon. 1 minute, everything looks going crazy, but actually, when you come back out, it didn't even move hardly anything. So scratch what I said.
Yeah, so the H4, they give us an order block to trade from and to start thinking, okay, maybe the buyers are indeed coming in, and that was after the the gap from the weekend. What did price do? Price came back into the order block within the H4, which is also an H2, or at least the move is visible in the H2. I like when I see that when you have that wick coming into that order block. This is the H2 that I mean, and just reacts from it. This happens. That catches my attention. Because something is happening. They are reacting on those structures, and if the market is, then we need to be. That's the cue for me. The direction. That's where we want to be going. At least the market wants to be going. And I haven't checked the ATR yet, but we did get with this wick where you got in, Alex. This is a very, let's see, there we didn't touch it, but if you take into account spread, you might consider that a touch as well. So the reaction or continuation of follow through from this mitigation order block, very fresh, makes a lot of sense to me too. And considering what the market has done so far, it's perfectly healthy, right? I say that a lot. You do whatever target we have needs to be realistic in terms of probability. And if we look at that move, it's it's very reasonable to expect some kind of a pop sometime, even if it doesn't change anything on the bigger picture and just continues lower. A pop, it's healthy, it's normal, it happens every so often. And what is the structure we have above? We have an order block there. It makes a lot of sense in my mind that the price is trying to get something like that before it continues lower, right? Because there isn't anything to the left that it has reached yet. And this order block, it makes a lot of sense for me, right? It indicated, right, with this big candle, that it's the momentum is to the upside. They have agreed, at least in this candle, that price is which side has control. So it makes sense that it comes into some order block. It has already retested the one below, left this H1. It's only an H1, it's not too much, but still getting there and then continuing to the next order block. So I like your trade a lot, Alex. In terms of the APR,
I'm gonna leave you guys to it, so I will see you guys later.
Actually, we are at the end of the stream as well.
We are ready, yeah? Right.
Wow.
Yes, we are.
These days go way too fast.
Yes, we just started. At least that's how I feel. And we're
Louis.
Let's look at that before we close. Yes,
Mike got in a long on Nas right from that pivot.
Ooh, that's some proper buying happening here.
Yeah.
That's on the 1 minute though, but still, it's very clear, a very one-sided move.
Wow,
that means that something has.
That's quite a market we are seeing right now here.
Yeah. Shame we're not going to buy up on crypto, or are we? Yeah.
If you look at Bitcoin, just closing a little bit higher, we would have a nice daily pin bar there.
Daily Bitcoin. Let's look at Bitcoin then.
Yeah, I just don't. Yeah. It's quite a big impulse candle, though. Don't you think that would just in crypto? I feel like those candles that.
It's like reflected off this area of support down there, but it's just wishful thinking, probably.
These get filled in as well a lot the day after.
Yeah.
I hate that. Yeah, GU also push up. Anyway, I'm gonna have to get off, or I won't stop talking about trading. See you later, guys.
Take care, man. Bye.
Take care, Alex. All right, so Bitcoin, we had a. Of course, it shows a gap, but Bitcoin doesn't have a gap probably here because of its trading on the weekend, and this price feed doesn't. And
the candle needs to be higher on the close, to be proper pin bar, of course.
Yeah, exactly. So, but on the lower time frame, we do see the ingredients of a much bigger move to the upside, right? We have that fresh order block being retested and it moves out. That's the kind of move you want to be seeing on the H4 if you want to take a long on a intraday or even a swing trade as a reversal point, right? Where you have those retested being successful on the H4. So that's very interesting on the H2. Let's see what else we have. And H1, we do have an area here, so it'll be very interesting. Actually, it was already this wick would have been the area to be looking for that entry, right? Because we had the H1, right? The H1 order block. We already had the H4, and let me see. There you go. So in that case, I would, the area would have been, looking for that quasi in here as the market is moving away. Look at that big order block on the H5 and looking for something that tells you either before or right around that area for that reversal pattern. Very nice movement. I like that. It looks like we're getting some, how do you say that? Bottom price buying. Let's see. Hopefully it is sustained for some time because Bitcoin, as many other risk assets, has been getting a beating last couple of days. But we are at the end of our stream. Sadly, I enjoy these moments. Sadly, I'm gonna say we are at the end of our stream. We are tomorrow again, same place, same time. So we invite everyone to join us don't forget to hit the like button. If you enjoy our company, you enjoy, everything we do our best to deliver to you, you want to see more of that, hit the like button, subscribe to our channel, we are growing very, very fast, but we still need your support to keep that momentum, to keep that push, that pop in our, growth that we're experiencing. So any last comments before we wrap things up? Dirk?
Good night, everybody.
Perfect. I like that. Thank you for being here and spending this time with us. I would like to, as I said, invite you for tomorrow. And remember about risk management. Very important. Longevity.
Very important, yeah, indeed.
See you guys. Bye-bye.
Bye-bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.